the management a few minutes back on the channel, and they mentioned that, well, things are business as usual for now. There are no concerns with regards to that project as well, and there is no change to their FY27 guidance. A couple of positive brokerage notes coming in for Motilal Oswal today, one from UBS, 4.5% higher on the stock, and an upgrade coming in for Bosch as well, a double upgrade. In fact, the stock is now up around about 4% as well. And lastly, Aster DM continues to extend its gains in today's session, another 52-week high for the stock. Apar Industries, you heard from the management on the channel earlier in the week, and since then the stock has been on a tear, another 4.5 today. And Jai Bharat Maruti too, a 52-week high for the stock, 7% higher today.
Okay, a lot of action in the broader markets. Thank you so much, Hormis, for bringing us that list. We'll discuss some of those stocks as well in greater detail. The stock on our radar right now is Anupam Rasayan. It is in focus after the specialty chemicals manufacturer announced the commercialization of one of their products. It is basically for flow chemistry platform. So basically, it's commercialization of ETFA, ethyl trifluoroacetate. To understand more what it means for the company, we are joined by Deputy CFO Vishal Thakkar to take this conversation forward. Vishal, good morning. Always a pleasure speaking with you. Give us a sense of how big this opportunity is for you. What is the TAM of this product? What would that mean for you in terms of revenue?
Hey, good morning, Sonal. It has been always a pleasure to talk to you. Early morning, it's always good. I see this is one of the products which we have been able to commercialize in flow chemistry. And I'll talk about the product importance of this product as well as of this chemistry and its process. So from a chemistry, from a market point of view, it's over a $500 million market potential here. The TAM is so large. We believe that achieving 10 to 15% of that over 18 to 24 months should be a good target for us because we have a very strong advantage of a flow chemistry in it. Two, if I talk about the process and the technical capabilities that we are talking about here in terms of flow, the flow chemistry really helps us in terms of improving the safety profile. It also improves in terms of its environmental footprints because we use lesser reagents, lesser products there. Also, the efficiencies are higher. The efficacy, the quality of the product is far improved because we are using a very precise injection method in terms of flow injecting the reagents, which will lead to a very small volume of reaction at every given point in time, and hence the reactions which are more exothermic in nature, more corrosive in nature, will help it here. So that is what I think will help us. So this technical capability is very unique. We will be the only one who has manufactured ETFA in flow for the fluorination one. And so A, from a product point of view, as I said, B, from a technical capability point of view, and 3, from a chemistry point of view. All 3 works well for us.
Okay.
Yeah.
Sorry, just reconfirming, what was the TAM you said? You will be getting 10 to 15% of that right now. Is that what you said? Just want to confirm that.
Yes. So TAM is around about over $500 million of TAM, of which we are targeting 10 to 15% in next 18 to 24 months. Also, one more thing that I would like to share with you, Sonal, is that this is only this is a very versatile product. It goes into pharmaceutical as well as into agrochemicals with products like pyroxosulfone or product like sitagliptin. But as we go, we will be able to build a full value tree beyond that. So this will be used as a key starting material for a lot of other products as well. And that will also help us in terms of increasing the capacity, increasing the utilization of these products into our further downstream products as well.
So do you start production immediately, Vishal? And since this is such a big product, do you already have tie-ups lined up in place with potential clients for this?
Yes, so we have clients across Europe as well as Japan and India. Yes, the capacity, this product we've been working from 2019. Unfortunately, because we did not have the fluorine supply chain sorted, which got sorted during acquisition of Tanfac in 2022, is when we started building the capacity. If you remember, we had invested a large capex during the last 2 to 3 years after a QIP. So now the plant is in place, orders are in place, and now we should be able to ramp it up.
Okay. Since it's fluorination, Vishal, and we always talk about it, how this could be the big trigger point for Anupam Rasayan. What are the margins here? They must be higher than your other product profile that you have, right?
So see, as I always had mentioned, it's a CSM play that we offer, and we will be working with a transparent pricing model. Yes, there will be always a tad bit of upward bias to this, but I will continue to say that yes, it will be strong margin accretive, but in the
Pras,
range that we talk.
will it be say 200 to 300 basis points higher than the current number that you have on margins? Come on, you can give us that number.
Yeah, it's quite positive there. I would put it that way.
Okay, so 200 to 300 basis points higher than the average margins that you're making currently, what you did in FY26.
I will go with what you are saying.
Okay, all right.
Here the street likes numbers, Vishal. You're giving them numbers, they would be happy. So if you're agreeing to that, then
Yeah, I agree with you that it will be upward bias, and the numbers that you said are fairly in the range that we would be targeting.
So do you need any further investments for this, Vishal, or everything is already lined up in place? All you need to do is start production and then sending dispatches out.
So almost we don't need any more capex, because as I said, we did the capex here, so I don't think we need it. It's more now just ramping up the capacities and ramping up the demand profile.
Okay, Vishal, then do you have any other products in the pipeline like this? Since this is a big opportunity, you have a first mover advantage here. Anything else in the pipeline with a big TAM that you have available?
So I'll tell you another 2-3 things on this. So in the flow chemistry, we have been doing a couple of more reactions also, like nitration and chlorination also in flow chemistry. But they were more for our internal consumption and products that way. But there are over 3 to 4 products that we have been working on where we will be able to use this special capacity or capabilities. And we are working on those products as well. So that is one side. So that's from a technical capability side. Second, on the chemistry side, I've always said the fluorination is one market which will be really very attractive for us, and we have been looking at growing it significantly. And 3, as I said, from an ETFA product point of view, we will be able to do a forward integration of a lot of other products, building it from ETFA, and that also projects are work in progress right now.
All right, Vishal, pleasure having you today. Firstly, congratulations on this achievement, and looking forward to the next conversation as well. Wish you good luck for the rest of the year. Take a short break. On the other side, market technicals with Ajit Mishra of Realty Broking and some trading ideas as well. Stay tuned. Welcome back. Still trying to hold on to that 23,350, 23,400 range is the Nifty. Although it has come off the highs of the day. Data patterns has moved to the day's highs or around about the day's highs, 6.5% higher on that stock is done well this week. Has data patterns continuing to move higher at the day's high. City Union Bank has extended its gains, is now up 6% as well. What's also up 6% is PG Electroplast. That is one stock that's doing well in today's session, 5.5% higher. Actually, the rates have not adjusted here. It's an X bonus for City Union Bank. It's a 1:3 bonus that the lender had announced, and since then it's now moving higher after that. So PG Electroplast 2 up 5.5% after that. We'll wait for the rates to adjust on this. This needs to be adjusted on City Union Bank. Ajit Mishra from Religare Broking is now joining in for a quick chart check. Ajit, good morning. Thank you for taking out time. Well, we've opened gap up, yes, but do you believe that there are enough legs to A, sustain this gap up, and B, move towards that 23,500 mark, which has continued to remain a barrier? Where is your view on the index and your stock recommendations for the morning as well?
Good morning, Gomez. So yes, we have opened gap up, but as you rightly mentioned that we are facing profit taking at the higher end, and which is normal to the trend that we are experiencing in the last few days. Means every time we inch closer to around 23,400, 500 zone, the selling pressure emerges. So basically the call writers are still active, roughly around 4 crores of OI, which is there at 23,400, 500 strike. Important aspect is almost that banking is showing noticeable resilience. We are retesting the long-term averages around 56,100 mark. And in case if we manage to surpass this level, then we have another 1,000 points, close to around 57,000 mark that banking might test. So that may provide the needed push for the Nifty to overcome this hurdle of 23,500 mark, that is the 20 EMA level, and then inch towards the upper band of this declining channel, close to around 23,800, 24,000 mark. So all eyes on banking. Once, let's say, we cross 56,100, then we are set for the next leg of the up move. So amid this, sectors like, healthcare, pharma, banking is something that you should continue to focus on. Federal Bank is leading from the front among the banking counters. So where the stock is trading at the record highs, still we are anticipating this momentum to continue. 340 is what we are eyeing as the immediate target. So with stop at 307, one can accumulate Federal Bank at current levels. Then we have Sun Pharma, which has seen decent consolidation after the marginal dip. It looks set for the next leg of rebound. So with stop at 1760, one can accumulate Sun Pharma for 1880 as a positional target.
Okay, all right. So those are some technical picks and the levels on the market as well. Thank you, Ajit, for joining us with that. Let's go across to Manglam. He's bringing us all the latest trends from the F&O space this morning. Manglam.
Good morning. So, it's looking like a decent screen for the market. If you look at the Nifty Bank, the mid-cap index, the broader market health is a lot better, though we're marginally off highs, but no real worries. The India VIX is lower. That should give bulls some support and, some encouragement. And we have the advance decline ratio, which is firmly in favor of advances, which tells you that portfolios are feeling a lot better as well. The only flies in the ointment is that from the highs, we've seen sell-off for two couple of occasions, twice this week. And the levels have been fairly similar as well. Today's high on the Nifty, 23,456, corresponds with Wednesday's high on the Nifty, which was 23,425 as well. So those are important levels that we need to cross. And beyond that, we have the technical resistance, which comes in at the 20-day moving average, which is 23,542, which is why despite the sort of, up move that we've seen, we haven't seen short covering by call writers. 23,400 call writers are fairly active in trade, as are the 23,500 call writers. So the market, while it's moved higher, it's yet to break out. And that happens only once we pass this 23,450 to 23,550 sort of range on the frontline index. But the important part is that support for the market is moved higher as well. So 23,400 put writers fairly active, 23,300 put writers equally active as well. That tells you that, from 23,050 to 23,100, which is the earlier support, it's moved higher to about 23,200 to 23,300 thereabout itself. Among individual stocks, a lot of shorts are caught on the wrong side on Godfrey Phillips. That stock's doing extremely well with a lot of unwinding that we've seen in open interest, which implies that there is short covering that is underway on Godfrey Phillips. So for the market, the base has moved higher, the support has moved higher, the resistance still needs to be crossed between 23,450 to 23,550, and a lot of individual stocks seeing short covering.
That's the level, right? 23,450, 23,500. That needs to be crossed on the upside for a proper breakout for the index. Mangalam, thank you for setting that up for us from the FNO desk. Well, the accident of yesterday's trading session was MTAR Tech. The stock was down around 12%. Today, it's up a similar quantum, which means it has recovered everything that it had lost in yesterday's trade. We caught up with the management earlier in the day and to discuss their biggest client, Broom Energy, and it was reported that they are facing some issues with regards to a major data center project. Listening to what the management had to say on this issue and on the road ahead as well.
We are on track with everything. There is no such delays as far as we are concerned. We are right on track, and in fact, the customer is breathing down our neck to ramp up quickly and quickly implement the capacity expansion plans. Uso is it's been completely it's a complete speculation by disbelievers. It doesn't make any sense to us at all. We have no such indication of what everyone is talking about. Absolutely not. We have very clear forecast over the next 5-6 years. It's not that just for 1 year or 2 years. So everything is being done based on clear forecast that we have and what we need to do over the years. We are doing much larger volume quarter-on-quarter basis. We are growing every quarter, which I have said earlier, and we stick to our guidance, what we have given. Announced in the stock exchange is more than 2,800 crores, I guess. We're already there, roughly close to about 5,000 already in this quarter. If you look at the absolute numbers, all our other growth engines like aerospace, nuclear, oil and gas is kicking in right now. So they're growing in the absolute numbers very well year-on-year basis. So fuel cell can grow much faster in a bigger volume, but that doesn't mean the other sectors, the absolute numbers are not growing. They are growing very well. So we are fine with that.
That's MTAR Technologies higher on the back of clarification coming in from the management as well. We'll slip into a short break now. When we come back, we'll focus on the bond markets with Manisha Gupta on the other side.
Hello and welcome to Bond Street. Joining us on the show today is Ashish Goel. He is co-founder of Vibe. Ashish, hi, thank you so much for joining in.
Thank you very much.
You co-founded Five, which was earlier known as Early Salary, with a focus on salaried Indians who couldn't access credit. What is the original insight and how has the company evolved since?
So we started 10 years back. We named it Early Salary. As the name suggests, it is to get the individuals their own salaries early. The insight was very simple. There is a large middle India which was becoming very, very prevalent, which was becoming a force in the Indian markets, and there was a need to create a customized product for them. The banks were not there, and we thought that there is a right time, right market to get into, and that's where we started building something called as Early Salary at that point in time. Over the last 10 years, of course, we evolved along with the journey. Today we offer very diversified products. Our products ranges from personal loans. Apart from doing personal loans, we also do education loans. We do finance healthcare. We finance health premium financing, which are very, very different markets, very, very different products.
So, it usually is said that the traditional lenders have struggled to serve salaried middle income segment. What is it that at Five that you have done that has cracked in credit underwriting that others haven't been able to do?
So I'll divide our insights into three parts.
Okay.
There are three things which are very critical for any businesses, whether it is traditional lending or is it fintech. The first is customer acquisition and the experience. Second is risk management and the credit underwriting. And third is collections and the overall funding environment. Funding the same customers from where we raise money from. Most of the times traditional lenders focus on funding the affluents. Their core purpose is to give money to the people whose salaries are, let's say, more than 50,000 rupees,
Okay.
which leaves a large middle India. India is still evolving. India is, the consumption story in India is just started showing up. And there is a large segment of middle India which needs a funding and which cannot be done the way the traditional lending happens.
Sure.
And that's where the customer experience become very critical. The new product lines has to come in. We allow our customers to take money on a mobile application as well as on the web interface. And on the back, there is a deep understanding of the customer using the technology and the analytical frameworks over 10 years. And also, while doing so, we also remain very, very cognizant of the fact that the customer needs are not what we think of. We just need to go back to the customer and ask them what is their needs. And that's where we build the multiple lines of businesses. Today, our lines of businesses stretches, like I was talking about, education loan.
Sure.
Like just to double click on education loans, we don't do education loans for overseas education. What we do is a short-term education loans.
Okay.
Like just to think of somebody wants to send his son for coaching. Today, there is no bank or anybody funds that kind of a variety of people.
Right.
Can we be there to make that happen? Can we fulfill that aspirations? Similarly, if somebody is looking for is at the hospital, rails, like when somebody walks into the hospitals, we actually work with the hospitals. So which allows us to build those products. And this is something which, in our mind, the traditional lenders find it tough to do it, and rightly so. They have larger objectives to play, whereas we decided that there is a large middle India, we want to focus on serving that consumer, and we have over a period of time has built products around that.
You've seen India's bond market from both sides, as you said, as a fund manager investing in bonds and now also raising debt. What is your honest assessment, let's say, of where India's bond markets stand right now from a perspective of retail investors?
So I think for last 20 years, I think we have done bond summits, bond conferences, committees. Everyone, all regulators are very, very keen to develop Indian bond markets. Till 10 years back, market was still very, very driven by institutional investors like mutual funds, insurance companies, banks, etc. In last 5 years, I believe that is changing. There is a lot more interest is coming from family offices, AIF funds, retail investors, as well as the HNI clienteles. As the Indians are evolving in their savings journey, I believe many of them are taking now a very, very conscious call to allocate money to the debt markets also, because that is a well diversified portfolios. Indians for a long period of time, the retail side has invested into the equity markets directly and taken that piece, and that is very deep retail participation in the equity markets. My belief is that we have just started the journey few years back.
Ashish, a final question then. A retail investor considering bond issued by fintech, NBFCs, what should they be looking at beyond credit rating to understand the business behind the bonds, whether they are genuinely sound or not?
So it's a great question. Most of the times we believe that bonds are complex, very tough to understand. My belief is that the bonds are as complex, as easy to understand as we do the equity market investing. There is much more data available. There are few things which anybody who is investing into NBFCs, whether it is fintech NBFCs or it's a regular NBFCs, has to be checked. One is rating agencies rationale, which gives you a lot of information about how the company behaved in last many years, what are the good points about the company, what are the things which rating agencies are looking at it, what are the points on which they believe that these are the what they are going to do over next few years. Apart from that, there are key numbers for any financial institutions like NPAs, capital adequacy ratios, the growth numbers, what kind of business they are in, what kind of cushion they have on their profits over the losses which they may, the credit losses which they make, and foremost is having some sense on the governance as well as the management structures, which is very critical for a retail bond investor to understand, and that can help them really building that portfolio nicely. But foremost thing which any retail investor shall do is that they should diversify instead of just building it on a couple of companies. Now today, my belief is that there are quite a few companies available in the bond markets, whether we talk about AAAs to all the way to A-rated companies. They should diversify their portfolios and build this just like they built a large cap, mid cap and the small cap portfolios. Similarly, if they go on allowing to build various kind of risk appetites, I think it's a great place to build some kind of a diversification into their portfolios.
Welcome back. You're still tuned into Trading Hour. Let's get a market conversation going now. Anupam Tiwari, Head of Equity Group Mutual Fund, is joining us on the show now. Anupam, good morning. Thank you so much for joining in. Well, we did get the May mutual fund data, and the decline that we saw in equity flows was massive this time, lowest that we've seen in 12 months. There were outflow, or I would say there were lower inflows on a month-on-month basis across categories. Coming into June, are you seeing some pockets making a comeback? What are you bullish on now?
Okay. Good morning. Thank you. Thanks a lot for having me here. So I think we should not look at too much into this month-on-month kind of flows, because retail confidence is there, and I think there would be some aberration in certain months because of environment, etc., etc. And also at times people would like to take some pause and benefit out of market volatility. So I think that's okay. But I think if you look at in terms of underlying, or let's say 12-month averages, they are looking good. And we generally don't see, whenever we interact with investors and distributors, we don't see pessimism the way I think things are being portrayed. People are worried. It's not that people are not worried. There is no hype per se, but there is no panic. There is no big, problem kind, despondency kind of thing with distributors. And they understand that this is a problematic phase which we have to cross. And during that time, there would be massive volatility. In fact, whatever distributors or investors I have met, they are more attuned to understand how they benefit out of this volatility rather than getting worried about it or thinking about, taking money out or not investing. Of course, people are more careful about allocation as of now. So not too much of hype, but there is no worry per se. This is on the flows, etc.
Right. Some flashes at the bottom of your screens. The Tata Motors passenger vehicles is going to increase the prices of its cars and SUVs, both on the IC and EV variants, by 1.5% to partially offset the impact of the rising input costs. That's the flash that is being put out for Tata Motors passenger vehicles. That will be effective from the 1st of July of 2026. So in about 3 weeks from now, Tata Motors passenger vehicles is set to hike prices yet again by around 1.5%. Anupam, since we are on this subject, with the conversations that you're having with your clients, what are you telling them to do with this automobile space? The sales numbers have been good. So far, so good, yes. But now we are encountering some multiple headwinds in the future with in terms of the rising fuel prices, the forecast of a subpar monsoons, and so on and so forth. And these price increases that these companies are undertaking from time to time as well. Where are you placed within this space? The commercial vehicle names, the passenger vehicle names, or the tractor manufacturers as well?
Yeah, so we are pretty positive on auto space, and we have been overweight since almost last 1.5 years, and we continue to maintain our overweight. We have done some adjustment depending on stock sizing, etc. But see, there are some basic reasons. We saw a big problem happening in auto space pre-GST time, right? Let's say 3 to 4 quarters of numbers going slow, etc. But we have to understand what was the reason for that. In my personal opinion, and that is what we had taken that call based on that, the reason was that during that time, there was a big confusion going on around where the policy direction would be in terms of ICE versus EV, right? And people were confused. People didn't want to invest big sum in ICE when they thought that EVs would be promoted and there could be a problem in terms of having an ICE. Your resale value, etc., will go down. Secondly, during that time, if you remember, the sweet spot right now in auto industry, especially on the passenger vehicle side, is let's say 10 to 20 lakh, that price range. And during that time, there was no EV available in that range. So except let's say Tata Motor has one vehicle. So, and that was like a smaller vehicle. So there was no like mid-size sedan kind of thing available. In last 12 months, there have been a lot of launches, new launches in EVs. So that has kind of given opportunity for buyers to have a broader choice, and that has driven a lot of sales growth. Secondly, with GST cut, government also kind of gave a good policy confirmation that it's not that they are going to overtly tax ICE side of the vehicles. And that again drove a lot of confidence for the buyers. And that is how we are seeing growth sustaining. And I think this growth will sustain, because we have seen a very tepid time frame in terms of sales. and now the sales will continue. There is underlying good demand in terms of premium products, and we are quite positive on premium consumption in India, and hence we are very positive. Now, of course, there would be some impact because of this whole monsoon thing. We don't know, we are not sure. There is no data available to tell you how much impact will happen and in which segment it will happen. Maybe it will happen in entry level, maybe it will happen at, let's say, lower than premium level. But yes, on tractors, the impact can be much more pronounced as compared to, let's say, PV. Maybe two-wheeler might getting impacted much more than passenger vehicles. So that's our thought process.
Okay, Anupam, you also manage the small cap fund, the large cap fund. What are you more bullish on now? Do you think we could see some comeback in mid and small caps? Some of these companies have reported strong numbers in Q4, but of course, Q1 could see a bigger impact of inflation.
Yeah, so from a longer term perspective, I'm very, very positive on small caps and mid caps. So the very fundamental reason, in short, to be very positive on small caps in India is basically three reasons. The basic hurdle or roadblock for any smaller companies is actually three: access to talent, access to capital, and access to customer. Right? They find it quite challenging as compared to a larger company to get good talent, to raise capital when they need it, and to access customer. Because larger companies have a let's say better advantage as compared to them. In last 5-10 years, that situation has changed. So in terms of access to talent, now talent availability is higher. People want to join smaller companies. That aversion is gone. The general availability of talent has gone up. Talent brings capability, capability brings growth. That's my fundamental belief. Capital availability has gone up between 2010-11 to 2019-20. In India, the biggest problem was that capital was not available. And that is when we saw massive outperformance of large cap as compared to mid and small cap. That situation has changed. Starting from a listed company, whether private equity or even on the listed space, now we are seeing adequate capital being available irrespective of market sentiment to smaller companies and mid-sized companies also. So that's second very, very important thing. And third thing is access to customer, both domestic and exports. The way digital infrastructure has evolved, the logistics that has come out, for most of the smaller companies, ability to access customer has significantly improved in last 5-7 years. So when I started my career, we used to be taught that what is the moat of large FMCG companies? Distribution. Because their product is available in 500,000, 1 million outlets, and nobody else can enter those shops, etc. Now with online, digital, etc., smaller companies can sell their product, access customer directly. And that is driving their growth a lot. So now, of course, every company will not succeed. There would be failures. But now export market is also picking up. We are very positive on manufacturing export, and we are very positive on overall mid and small cap space. The only caveat here being, it's a very long-term game. So you should not expect making great money in next 2-3 years or 5 years. I think you need to give it 8 to 10 years. And there would be a lot more failures than successes. It's a very challenging job to scale up a small company. People have to be very careful, and this segment will make good money over next 10 years.
Anupam, short but insightful conversation. Thank you for sparing time and joining us today. Looking forward to the next one. Take a short break. Back with more on the other side. Stay tuned. Welcome back. The falling crude oil prices also has had a cascading impact on the automobile space, and of course there are multiple other reasons as well as to why they are in the spotlight. Not just the commercial vehicle manufacturers, but even the CV financiers are having a very good day today. Sudarshan is here to tell us exactly why. Sudarshan.
So all your major CV names or CV financials are higher in today's trade, and the main reason is the sharp fall we have seen in crude prices. So just I'll give you the historical data of crude ahead of this war. When it started on 27th of February, that time crude was hovering around $68 per barrel, and from that level it had gone 85% higher and hit the high of $126 per barrel in the month of April. From that level, now we are down almost 30%, currently trading below $89 per barrel. So that's been the move over the last 3 to 4 months as far as the Brent crude is concerned. Now, what's the impact? So, and that was impacting on share prices of CV and CV financials as well. At one point, Ashok Leyland, ahead of this war, used to be trading around 200 rupees per share. Now it's around 144. So what's the impact? The fall in the crude basically improves the freight demand. Now why? Because the diesel prices come down, which reduce the operating cost for the fleet operators, which can be positive for CV companies. And also, it improves the demand for M&HCV and LCVs. It comes with a lag of 1 to 2 quarters, but nevertheless, it does improve the demand for all the CVs. Now, second, the fleet utilization too sees an improvement because of the lower fuel cost. And last, there is a historical data which suggests that if there is a sharp fall in crude, input cost also come down. That will aid the margin for these names. Now coming to CV financials. So what happens? Operating cash flows improve because of sharp fall in the crude, because diesel accounts for almost 35 to 50% of the operating expenses for most of the truckers. Second is the higher vehicle financing demand. So fall in the crude improves the financing demand, and fleet expansion replacement cycles too strengthens because of the fall in the crude. So these are some of the basic things that happen when there is a fall in crude, and in resultant positive impact on CV companies as well as CV financial. That's the reason you are seeing a sharp up move.
Oh, we are. Thank you so much for explaining that to us, Sudarshan. There's an impact on the entire market as well, because crude has been a big worry for Indian markets, inflation, as it impacts the entire sector. But let's move on. UBS has also released a note on Motilal Oswal. The stock is surging in trade. Sudarshan, a busy day for you. Tell us more.
So all the major capital market names are high in today's trade, but special focus on Motilal Oswal because there is a positive brokerage note today. UBS has come out with a note initiating coverage on the stock with a buy call, and target price here is almost 1150 rupees per share. And it says that transition to AUM-led platform will improve its non-linear earnings growth. And the second reason is operating leverage also drives as far as the earnings growth is concerned for the company. And for business mix, its shift towards AMC and private wealth has the potential of re-rating that company might see over the next few years. And because of these factors, for FY 26-29, Motilal Oswal UBS expects AUM to expand at a 21% CAGR, and that will drive revenue growth also at a 19% CAGR. And because of this, you are seeing a sharp up move, currently up more than 4%.
Well, Motilal Oswal doing well for itself in today's session, but we can't let you go so easily, Sudarshan. And Jefferies has also issued a note on the auto sector, keeping you busy today. Tell us more on that.
So while the fall in the crude is positive for auto names, but there is a concern related to demand as well as margin because the sharp uptick in input costs that we have seen over the last few months. And this is the background of Jefferies' note that it has come out today on autos. It says that earnings outlook for Indian auto companies has weakened in 2026 amid demand as well as margin concerns. However, intensity of street earnings cut is relatively lower for two-wheelers, auto ancillaries, and from four-wheeler pack, it's Mahindra and Mahindra. So consensus FY27 EPS estimates as of June stands, it's up 3% for Bajaj Auto, down in the range for 1 to 3% for most of the auto ancillaries like Bharat Forge, Samvardhana Motherson, Sona BLW, Bell Rise, and amongst auto companies Hero, Eicher, TVS, Mahindra and Mahindra, and Tata Motors Passenger Vehicle. But it's sharply lower, and that's in the range of 7 to 12% for companies like Hyundai, Ashok Leyland, Maruti, and Uno Minda. But despite these factors, Jefferies largely has a buy call on major auto names as well as auto ancillaries. So So amongst auto names, it has a buy call on Eicher, TVS and Mahindra. Amongst auto ancillary, it has a buy call for Bharat Forge, Samvardhana Motherson, Bell Rise, Uno Minda and Sona BMW.
Okay, we'll let you catch breath, your breath, Sudarshan. Thank you so much for bringing us all these details. So that's the update coming in from Sudarshan on different sectors. Time for a short break now. When we come back, we'll get you more on the markets on the other side. Welcome back. It's a good Friday for the bulls. We continue to stay above that 23,350 mark. No major moves actually since then. The mid caps are outperforming. We do have the small cap index, which is doing really well as well. From the broader markets, couple of stocks which are buzzing on the upside. IFCA is one of them. It is up around 16.5%. Lakshmi Dental is the other one, which is up around 10%. Lert Revenues Tech or Ixigo, that is the other one, which is surging in trade up around 9%. And we have Netweb as well, making a comeback. That stock is the other mover in trade today, 7.5% higher on that one. We have a long list of stocks which are buzzing on the upside as we speak. But we did get some market opinion as well. We spoke to Sandeep Bhatia, MD and Head of Equity at Macquarie Capital, to get his views on the markets, his top sectoral bets. Listen in.
There's a real risk that the mutual fund inflows, which have been holding up the market, this market is being driven by the SIP liquidity, that essentially starts falling off and drying up. I don't expect a significant change in FI sentiment in the near term, at least till July, August. Flows into India from foreigners, at least in equities, will not be easy to come by. And if the domestic flows stop, yes, there could be a sell-off in June, July. And that's something which actually is not a bad thing in my view, because the market valuations are the real barrier to foreigners returning to India. We like State Bank of India. We have liked the private sector banks. We liked HDFC Bank, but that's been actually on the top of the sell list of most foreigners. So it's been an underperformer. I would think that this market essentially will continue in pockets to do well. And some of the names that we continue to like, we like Make My Trip, we like TVS, we also like Trent. So yeah, some of these names will continue to do well. We like Titan. That's something which we like. We have liked Nestle. So those are some of the consumer staples names that we like. I think even on the hotel front, it's actually now interesting, as you just mentioned. While foreign tourist arrivals may have taken a hit, the domestic tourist season is still holding up. And in fact, if we see lower oil prices and if airline ticket prices come off, then actually it will be good for domestic tourism. We just initiated on the energy sector. So we like, we like CG Power. We like the entire power generation sector, NTPC, Adani Energy. So I think one way to place this is the entire data centers which are coming up. There are no big listings as of now, but the entire energy supply chain clearly is one way to play it. So we like that. And yes, manufacturing in India is definitely seeing revival and uptick. And to the extent that the government spending, as I just discussed, continues, I think broad investment in infrastructure and also the government support in terms of the wage bill. We're going to have the the eighth pay commission coming in next year. So all that essentially means that broad consumption and infrastructure investment will continue. So we like those stories.
Macquarie and the stories that they like. Time to take your leave on this edition of Trading Hour. The Nifty still holding on to gains of around about 200 points. The Nifty Bank doing well. The broader markets doing well. It promises to be a good second half for today's trading session. At least that's what the bulls will be hoping for. From Sonal and me, thank you for watching. Halftime Report takes the action forward.
Hopes of a US-Iran deal powers up stocks with mid-caps taking the lead. Financials, realty and consumer durables are the prominent gainers.
Stocks of truck makers and financials drive up as Brent slides below $89 a barrel. Indigo Airlines owner Interglobe Aviation is the top gainer in the Nifty index.
Stocks like MTAR Technologies, NetWeb Technologies, Data Patterns soar on SpaceX effect as Musk Ventures seeks to mop up $75 billion at a price of $135 per share in the world's biggest IPO yet. Early investors in a $1.7 trillion company are set to reap the bounty.
Gold rebounds to near $4,200 per ounce following a sharp drop after Trump says that the Iran war is settled and is subject to a likely finalization over the next few days. Silver too regained some luster.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Today with me is Vivek Iyer as well. Vivek, very good afternoon. And today, at least in one of those days, we are seeing that the Nifty is managing to hold on to the levels. More of a range-bound session that we've seen coming in the markets as well. But at least green on the screen is what we're watching out for.
Good afternoon, Vinny. You're absolutely right. We entered the session today, like we mentioned, with quite a lot of positive cues. Overnight, we saw risk on rally across all of the risky assets or the equity assets, bounce back as far as gold as well as silver is concerned. Crude oil is, has fallen quite significantly from the recent peak. So a lot of positive triggers, and that is something that's reflected as far as the ticker is concerned. In terms of the broader end of the markets is where you're actually seeing quite a lot of action. Remember, we saw significant underperformance there, and today, advanced decline ratio is quite positive. And the Nifty IT index, remember, when after 7 straight sessions of losses, today is back in the green.
Absolutely. Nifty IT back in the green today and all sectors trading in the green. So it seems like bulls will be having a good day, at least as of now. What's interesting also is that FII data, right? For this week, we've seen the FII flows, the outflows that were going on, that's seeing a reduction every day. From 8th of June, 9th of June, we're seeing a reduction. Yesterday, FII sales were at around 1,900 crores approximately in cash. So that'll be interesting to watch out for. But like we said, right, the broader end of the market today, that's where we're seeing the trend. That's managing to hold on to very strong gains. We have individual names like IFCI, which is among the top Nifty small cap gainers as well. We have Data Patterns, NetWeb Technologies. All of them are managing to hold on to very good gains. Advanced decline ratio today clearly in the favor of advances versus declines as well. But let's move on and talk about what's on the show for you all, right? We'll be putting the spotlight actually on the power sector, and we'll take that conversation forward with Bernstein's Nikhil Negania, who will be joining us as well. Later on, we'll have Manisha Gupta, who will be speaking with NSE's Sriram Krishnan as the exchange rolls out commodity contracts. And in our Crypto Corner segment today, we will have management joining in as well from JEBTC. So we'll talk about cryptos over there, as well as we'll have the focus on the big movers in today's trading session. And let's start with those big movers, which are those buzzing stocks in the trading session as well. First up, Vivek, who has now moved on to the wall to take us through those buzzing stocks. Vivek, over to you.
Well, thank you so much for that. This afternoon, advanced decline ratio in the broader end of the markets is quite positive. So more gainers than declines in today's trading session. First on the list in terms of a very sharp bounce back after yesterday's sharp cut has to be MTAR Technologies. The company went ahead and reiterated strong FY27 guidance. They said that, in fact, Bloom is now contributing more than 65% of the top line for FY27, and the demand there is only increasing. On the back of that, on very good volumes, higher by 13%. IT stocks, remember we said that they've snapped a 7-day losing streak. Today, most of the names have rebounded quite smartly. OFSS, TCS, Wipro among the top gainers today. Bosch is the other name in focus. After a while, UBS that had a sell stance on the stock for quite some time went ahead, changed their stance. They did a double upgrade, so that particular stock higher by almost 4% today. And the entire oil-sensitive pack, so all of the OMCs, HPCL, BPCL, IOCL, companies that depend on oil as a raw material, those stocks too doing quite well. I have Indigo higher by another 3.5%. And PSU banks, most of these names today doing very well in the session. Bank of Maharashtra up 3.5%. Most of the PSU banks up anywhere between 1% to 3%. On the other hand, very few laggards today. ONGC, Oil India oil prices have cooled off. Also an overhang in terms of the relief that was granted being taken away within a month. So both ONGC, Oil India under a bit of strife. And Mahindra Holidays, one of the few stocks from the broad end of the market today under a bit of pressure. But overall, a very positive session, and advanced decline ratio clearly indicating the strong market breadth that we're witnessing today.
Okay, Vivek, thank you so much for that. But now let's focus to the power sector, right? Bernstein, in a recent note, said that India's power sector is a structural and not a cyclical story. They prefer thermal nuclear battery players over solar names. To discuss this forward, let's bring on board Nikhil, who is the director, senior analyst at Bernstein right now. Nikhil, good afternoon. Thank you so much for joining us on the show. In the report, we're talking about demand trends as well. You've started talking about the trend that calendar year 24, mid that, we started seeing that peak coming in terms of demand. Talk to us about current demand trends for the sector, given that this year maybe we have some boosts coming in, data centers, El Nino conditions, energy security, all of that comes into play, right? So what is the demand trend now? What is the expectation maybe for calendar year 26?
Thanks for having me on the show. Starting with power demand. From a long-term perspective, usually power demand grows in line with real GDP or slightly lower than that. And around it, it changes a lot with the weather. So as you rightly put it, June 24 onwards, we had a very poor season, poor period of power demand, 18 months, hardly any power demand growth. This fiscal, April, May, especially May and June, we are seeing more than 10% power demand growth. Supported by a low base and warm weather, low rainfall. Near term, we expect this trend to continue. We expect a strong second half for power demand. And longer term, as you said, all those drivers, whether it's electrification, which is a global theme, whether it's data centers and energy security, all of that adds up. And we build in about 6% power demand growth for India in the medium to long term.
Well, thank you so much, Nikhil, first up for joining us. It's been quite paradoxical, right? Especially given the fact that what's been quite unprecedented has been the fact that in the last couple of years, you've seen very low power demand, in fact, not even keeping pace with the GDP growth. Even against that particular low base, while FY27 has started off on a strong note, power prices on the exchange are not reflecting that reality. In fact, in the afternoon, you're actually seeing power prices go to as low as zero. So can you explain this particular paradox to us, the supply as far as the short-term power market is concerned, and also prices that are fluctuating quite wildly between the during the daytime as well as in the evening time?
You're right. So in India, 90% power goes through long-term contracts. 10% power goes through the power exchange or the spot power market. In that, if you see, we hit a peak in 2023, if I'm not wrong, on power prices. Since then, prices have moderated a bit. Still much higher than the last decade, but it's moderated a bit. But if you de-average it, if you de-average the prices, what is happening is we've added a lot of solar capacity in the last 5-6 years. We have not added a lot of thermal or nuclear or battery storage. Hence, in the afternoon times of the day, the prices fall to 1 rupee, 2 rupee a unit of power. But as soon as the sun sets at about 5-6 p.m., that's when the prices shoot up to 10 rupees per unit of power, which is the ceiling the government has set. So on an average, it looks modest, but if you de-average it, the problem India has is an evening power shortage or evening power tightness. And hence, a non-solar hours of the day, which is about beyond 6 p.m., that's when prices are hitting a ceiling of 10 rupee, which is quite high and very lucrative if you have a battery or even a merchant thermal power plant.
Mm-hmm. On that note, Nikhil, what's your thought coming in on, battery storages, as well as going forward, right, like you mentioned, right, we've added most of the power that comes in was the solar side that we've added. Going forward, will we require more wind, thermal? Is that where one should look at in terms of trends as well?
Our investment selection has also been the non-solar hour. That's been our investment selection to our clients. In terms of the capacity mix, if you look at government forecast as well, we expect about 35-40 gigawatts of solar to come a year, about 5 to 10 gigawatts of wind to come a year. Wind, while we should add more, the limitation, it's not easy to execute wind power projects. And good wind sites are limited. Large good wind sites are limited. So government is pushing on storage, battery storage, which is hardly anything. But we see companies like Adani Green add a lot of battery storage this year. Second, government is also pushing on pump storage, where companies like Greenco, which are not listed, are adding big pump storage power plants, which can also shift supply from afternoon to evening times of the day. And then, of course, nuclear thermal, these are medium to long-term execution projects. A new thermal plant takes 5 years, a nuclear plant takes 10 years. All of those aspects are seeing acceleration in capacity addition.
Well, that's right, Nikhil. Nikhil, so now I'm going to push you for your top picks. How are you playing this particular theme, the theme where you're actually expecting power demand to rebound quite smartly as far as FY27 is concerned? Where does your preference lie? Is it pure play solar, pure play wind, the integrated players, or will you look at the financiers?
So within utilities, we have liked state-owned utilities for the longest time. So NTPC is one name we continue to like, although near-term it's seeing some pressure. It's a reasonably valued stock. They are adding thermal, nuclear, renewable, all three fronts. They are well positioned. For nuclear as well, one of the few companies who are advanced in their plans for nuclear in India. Beyond NTPC, we like JSW Energy among private utilities. Adani Power used to be our top pick when we initiated in March, but it's rallied quite fast. So at this point, we like JSW Energy, again, because they're adding new thermal power plants, where many are shying away from it. We think thermal plants is where you make good returns, and they are ones who are proactively chasing those opportunities. So NTPC, JSW Energy, we like those two names. Power financiers look cheap. We think there can be a trade there as well, so we like them, but they are riskier stocks. The impact of Forex, we think, is underappreciated in those stocks, and loan book growth also has been modest. So we are positive, but from a trade perspective than buy and hold from a long-term perspective on the finances.
Okay. Sure. Nikhil, I just want to know one more thing, right? You said you're not too, you're cautious on that solar side, right? Solar players. You have an underweight rating on Waaree, Premier, and all those names. What maybe could change your story here? And why are you so worried about it when we are adding, capacity on the solar side as well? What is your thought, and what maybe could change your thought going forward from underweight to another rating, higher rating?
No, fair question. See, these renewable companies, so they are good companies. Waaree, Premier, they are both market leaders in that segment. Our view is more an industry view rather than a company view. We believe margins right now are unsustainable. They are too high. So we see new supply coming. Many players are setting up solar cell manufacturing capacity. And we see some demand softening this year as well. We think due to transmission issues, solar addition in India might moderate in FY27. So if you combine moderation in demand plus new supply coming in on solar cell manufacturing, we think margins for these players could come down, which they have in the last couple of quarters. We think that trend might continue. So the way to play these stocks, we think we are waiting for margins to bottom before we change our view. We think once margin compression happens, smaller players move out, consolidation happens in the industry, that is when you buy these stocks, which we think is another year out from now. So we wait for that moment before changing our view.
Nikhil, before we let you go, one quick word from you. I don't know if you have coverage on a company called as CleanMax, but I want your view, on the CNI space in India. What is the kind of growth runway you see there? Do you see it less risky compared to some of the integrated players that you currently have coverage on? And what is the kind of targets that you will have in terms of India being able to add CNI capacity?
Yeah. So we don't cover CleanMax, so we won't be able to comment on the company, but the CNI space, to share my view, Vivek. See, CNI space, one positive and one negative. The big positive is we are seeing a lot of traction in the CNI space from data centers, from companies like Meta, who signed a big contract recently, one with Reliance, one with CleanMax. So there is interest. There is interest from corporates to sign renewable CNI contracts, which we think is a tailwind which will continue. So that's the positive part. On the challenge front, if you look at some recent directions from the government, central government, what is happening is a lot of good customers for a power discom are going away, right? A good factory which pays you well is moving to its own captive generation. A bungalow is moving to rooftop solar. So discoms are left with very few customers. The good customers are going away from them. So government is trying to bring in regulations, to sort of bring this gap down or make it less lucrative to be moving to a CNI contract. For example, increasing the fixed tariff the DISCOMs charge and reducing the variable tariff. So regulatory reasons is why we think some impact could be there on the negative side for the C&I space. But the demand is, we have also been surprised by the strength of demand for new C&I contracts.
Okay. Nikhil, thank you so much for joining us this afternoon, giving us your view in terms of the power sector, what's looking nice, and where you see the trend moving. Thanks so much for joining in. On that note, we're going to step into a very short break. After the break, we're going to be putting the spotlight on MTAR Tech in our Insight Edge segment. Stay tuned in.
Welcome back to Halftime Report. Well, this is our Insight Edge segment. We will be focusing on MTAR Tech, which is buzzing in trade after an essentially very weak session yesterday. Remember, earlier today, the management joined us and they told us that the company has not received any communication from Bloom Energy regarding a pause in the data center project. Ria joins in with more details.
Well, yes, today MTAR Tech is up 13% after yesterday's 12% fall. Now, yesterday the stock tanked after a report said that the company's key client, Bloom Energy, is facing delays in its data center project in Wyoming. This is a 1.8 gigawatt data center project initially being built by Crusoe Energy, and this is tied to the company's fuel cell deployment pipeline. Now, the facility is to be powered by a mix of Bloom Energy's fuel cells as well as grid electricity, and the project is going to deploy around 900 megawatts of behind-the-meter fuel cells from Bloom Energy. Now, the reason that MTAR Tech stock reacted yesterday to this news is that the company derives roughly 55 to 65% of its revenue from Bloom Energy, and MTAR is also the key strategic supplier to Bloom, supporting its solid oxide fuel technology as well as its solid oxide electrolyzer programs. And however, today the management said to us in an interview that there has been no indication to them from Bloom Energy about the data center project being paused, and that the data center pause is complete speculation at this point. They've said that there are no delays in the project as far as they are concerned, and they remain completely on track for the execution of their orders. They have also mentioned that they are executing much larger volumes quarter on quarter every quarter for Bloom Energy, so that remains on track from them. And in fact, overall, they have already received roughly 2,700 crores worth of orders in this quarter itself, and they have surpassed their full year FY27 guidance of 5,000 crore order book by the end of the year. And in fact, the full year guidance for FY27 also remains intact for the company. They have guided for 80% revenue growth this year as well as 24% EBITDA margins for the year. The stock is up over 4.2 times just in the last 1 year, and currently it trades at a PE of 102 times on a 1 year forward basis versus its 2 year historical average of 52 times. So it has been a stellar run for MTAR Technologies, and listen into what else the management had to say as well.
We are on track with everything. There is no such delays as far as we are concerned. We are right on track, and in fact, the customer is breathing down our neck to ramp up quickly and quickly implement the capacity expansion plans. Crusoe is it's been completely it's a complete speculation by disbelievers. It doesn't make any sense to us at all. We have no such indication of what everyone is talking about. Absolutely not. We have very clear forecast over the next 5-6 years. It's not that just for 1 year or 2 years. So everything is being done based on clear forecast that we have and what we need to do over the years. We are doing much larger volume quarter on quarter basis. We are growing every quarter, which I have said earlier, and we stick to our guidance, what we have given. Announced in the stock exchange is more than 2,800 crores, I guess. We're already there, roughly close to about 5,000 already in this quarter. If you look at the absolute numbers, all our other growth engines like aerospace, nuclear, oil and gas is kicking in right now. So they're growing in the absolute numbers very well year-on-year basis. So fuel cell can grow much faster in a bigger volume, but that doesn't mean the other sectors, the absolute numbers are not growing. They are growing very well. So we are fine with that.
Okay, that's the word coming in from the management. They've not heard anything. They're calling this just speculations and, disregarding the fact that this was even happening. So today, we're seeing the stock recover and trade as of now. It's up 13%. Yesterday, it was down 11%. The day before, it was down 4% as well. But today, making a comeback, 13% uptake for the stock. On that note, let's step into a very short break. We'll have Jay Thakkar of ICICI Securities joining us after the break to talk to us about his trading strategies and individual stock names. Stay tuned in.
Welcome back once again to Halftime Report. Well, it's a good time to get a quick technical check on the market. We are joined by Jay Thakkar, Head Derivative and Quant Research at ICICI Securities. Good afternoon, Jay. Well, after many days, in fact, of very range-bound trading today, we are seeing some upside as far as Nifty is concerned. Do you think this can sustain? What are the levels you're tracking?
Good afternoon to you, Vivek, and Vinny as well. Yes, after a good amount of consolidation again, we have seen that this time around the index is attempting to break on the upside. So, Vivek, in this entire corrective phase, which started, say, since last series, because April we had a phenomenal bounce back after a sharp cut in March. But then May was relatively quite slow as far as the momentum was concerned, wherein the prices declined. But then, this is what was happening. As you said, the markets fell, went sideways, and thereafter it used to generally break on the lower side only. But this time around, what we have seen, the extreme pessimism again. As far as the data is concerned, the index FI shorts had actually gone up to almost 2.7778 lakh contracts again, as compared to when it was at 22,250 earlier in March lows. That time around it was at approximately 2.9 lakh contracts. 90. So, Vivek, it had gone to that extreme as far as the finance short is concerned, and we did not see the India VIX or the IVs going or bouncing back that much as it had actually gone that point of time from 13.5, 14 to almost 29 plus. So it had gone up by more than double. This time we did not see that happen. Rather, it remained pretty much in range of 16 to 2021, and thereafter it broke the range on the low side as well. That was giving the comfort that yes, the market is actually reading these data points at quite an extreme, indicating that index might be at an oversold region. And cherry on the cake would be the drop in the crude oil prices as well, which is no longer at 120 and not even above 100. In fact, it has just managed to break the levels of 90 as well. So these are things, Vivek, indicates that the chances of index now heading towards 23,550, which it has been attempting a couple of times in recent past. Now it will surpass those levels and probably head towards the levels of 23,800. For this series, if you see the cumulative put base or the put open interest, it's at 23,000, wherein we have been very much watching it closely. So I think that until those levels are held on a closing basis for a day or two, 23,000 levels. Until the index doesn't close below those levels, I think the chances of a bounce back until 23,800 is quite high.
Okay, we'll keep an eye out on those levels over there, Jay. But what are your individual strategies right now then in the market?
Sure, Vinny. First buy recommendation would be on the Kotak Bank, because we have seen that this time around the Bank Nifty, which had earlier been an underperformer in both of these correction, but then in the recent last 1,000-point kind of a correction, Bank Nifty has been outperforming. That's been showing clearly long, short covering as far as the private sector banks are concerned. So Kotak Bank at trading at around the levels of 398, I think is likely to inch towards 415 to 425. For this series, I think that 379 would be a very good support. So with that as a stop loss, one can go long on Kotak Bank. Dalmia Bharat attempting a short-term bounce on a, I would say that there has been good amount of shorts build up here. But the risk load is quite positive because it has reached to its recent previous monthly swing lows. So at around the levels of 1635, in anticipation of a short covering, it can inch to 1700 to 1750. These will be the two short-term targets. One can place a stop loss below 1580 on a closing basis. And a final buy recommendation, when it would be on Cipla, which is trading around the levels of 1393. I'm expecting this stock to further inch higher towards the levels of 1420 to 1450. Earlier, it had bounced back on account of short covering, but the overall theme as far as Nifty Healthcare is concerned or Nifty Pharma is concerned, wherein we have been bullish since May series, I think is likely to continue going forward as well. So with a stop loss below 1370, one can go long on Cipla as well.
Okay, Jay, thank you so much for joining us this afternoon, giving us your individual picks as well as the levels we should keep an eye out on for the Nifty. But on that note, we're going to slip into a very short break. After the break, we'll have the Crypto Corner segment where Manisha will connect with Gui Gomes on the latest trends in the world of crypto. Stay tuned in.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Joining us today on Crypto Corner is Guy Gomes. He's CEO at Orange BTC. Mr. Gomes, hi, thank you so much for joining in. And the first thing really is about the prices itself, because the month of June hasn't started so well. And if you look at the last few months as well, 2026 is now negative when it comes to Bitcoin. How are you looking at various macro data points and kind of institutional or ETF selling that we have seen in the space?
First of all, thank you so much for hosting me. It's a pleasure to be here. Bitcoin has had a tough year so far, which is to some extent in line with its cycles. This is an asset that is growing over the past 16 years, but it doesn't go into a straight line. It goes through cycles, and right now we are in a bear market. And from my perspective, what we're looking at a macro level is there's still a lot of geopolitical uncertainty with the Iran war, and that's definitely impacting assets overall, including Bitcoin. In a more narrow sense, we're seeing a lot of IPOs, especially in the US, around AI. We know SpaceX is coming, and also Anthropic and OpenAI. So there's a lot of excitement around the AI investment thesis, and it's taking a little bit of flows outside of Bitcoin. So overall, it is in line with expectations. This is an asset that is growing through adoption and go through cycles, but over the past, let's call 8 months, since October of last year, Bitcoin is going on a downtrend, is now essentially 50% below all-time high, which is pretty par for the course when you see it through previous cycles. But at this specific point in time, I think we have macro tensions going on, and also some specific IPOs and excitement around AI, who is taking money outside of Bitcoin.
Oh, well, yes, the money is going into IPOs and it's AI all the way around. How is it going to be going forward, though, Mr. Gomes? Is it going to be crypto versus AI, or you think there's a convergence coming in the horizon sometime soon?
I think there's a convergence, right? Bitcoin was designed to be a monetary asset for this digital world, and AI is accelerating the world into a more digital frame. So I think over time, we'll see agents transacting value. We've already seen it. We've seen research being out over the past few months saying that AI agents, they really like Bitcoin as a monetary asset. They want to exchange value 24/7 without a counterparty risk. So I think more and more, these two worlds will converge, and AI agents will need digital money, and Bitcoin is that. So I think right now the market is much more excited about the AI, but over time, as these two worlds converge, we'll see a lot of innovation.
A lot of traditional financial markets now seem to be getting on board, on chain. How would you look at the next 5 years, let's say, in how are you looking at crypto prices and institutional adoption, and of course about the real world asset tokenization?
Yeah, we always like to see from a fundamental perspective. So from a fundamental perspective, starting with Bitcoin, we can see more and more adoption, right? Just the past few months, we've seen big US banks announcing products, ETFs, and helping to their clients to invest in Bitcoin. So this is pretty interesting and bullish over the long term. When you think about crypto overall, we continue to see high adoption of stablecoins. Countries like India, Brazil, other parts of the global south, they're really looking for a way to invest in the dollars and move money around. And we know that stablecoins do that job extremely well. As a third piece of this overall ecosystem, we're seeing more and more assets going on-chain. So tokenization, which has been expected for many years, is now starting to take off, and we're seeing more and more assets, stocks, bonds being tokenized. And as a third aspect of this overall ecosystem, we're seeing innovation on capital markets. We're seeing companies like Strategy in the US launching what they call digital credit, which is essentially preferred shares that negotiate on NASDAQ and pay you a monthly dividend. So we're seeing a lot of innovation in the space, a lot of excitement, but during a bear market, that's what is interesting. There's no single news that moves the price up. the sentiment is negative, but that's usually the best point in time to allocate because, of course, sentiment comes and go and eventually get into a bull cycle and things move very fast.
Your final question then, from where we stand right now, how would you look at the markets for the rest of 2026, even spilling into 27? And what is your company's plans now going forward in the space?
Yeah, I think what the market will give us for the next 3 to 5 months is a little bit more of the same. I think Bitcoin is likely moving sideways during the summer. We're going to see a lot of new IPOs, a lot of capital chasing these AI stories. But again, as I mentioned, it's a great time to allocate. Our company in Brazil, our main focus is to help to drive Bitcoin adoption in this corner of the world, Brazil and Latin America. So we're seeing this as an incredible opportunity to continue to allocate, to buy more Bitcoin, to build our treasury, and to help to educate the market. There's a lot of innovation coming down the pipeline that we are building, but also across the ecosystem. We also have some high expected new legislation, especially in the US. The Clarity Act should be approved within the next, let's call it 3 to 6 months. And that, of course, will bring new flows and new excitement to the market. So overall, bear markets are a great time to be building. We're building, moving steadily ahead, accumulating more Bitcoin, and helping to build this revolution that will be playing out over the upcoming decades.
All right, we hear you. It's a bear market in cryptos, but bear markets are great to start building up in sense of portfolios. Thank you so much for joining in with your sense on crypto as an asset class. But with that, let's slip into a short break. We will get you a conversation with the NSE's Sri Ramakrishnan as the exchange rolls out commodity contracts. Stay tuned.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Well, joining us on the show is Sriram Krishnan from NSC. Mr. Krishnan, hi, thank you so much for joining in. I was reading the latest data and that does show that the commodity segment seems to be making newer highs here. Where would you see the major volumes coming in from in sense of collaboration there?
No, I think the crude oil contract has picked up very well. It has been doing well in the last several months. Yesterday was another expiry day, and for the first time ever, we've got about 53%, 54% market share of the number of contracts that were traded yesterday. So this is an important milestone for us. Although in terms of premium turnover, we still have a long way to go. We are about 21, 22% market share. But I think it gives us a lot of encouragement. And the change of expiry day seems to have been well received in the marketplace. We've also changed the expiry day of the natural gas contract, which is also looking good, well set to do well. Apart from that, of course, on gold, the 10 grams contract seems to be picking up in terms of popularity. And the first expiry, we saw about 100 deliveries done. And the second one, about 300. And now we are heading for the third expiry. And I think it's going to be an increasing number, which means the contract is being well received as well. So amidst all of this, we've also announced the EGR launch, which is now shaping up well. We've received feedback from various stakeholders, and we are in the process of getting the volumes going on EGR.
Oh, absolutely. Mr. Krishnan, EGR was my next question as well. You launched it on 4th of May. And, you know, as you said, there has been a lot of feedback from the industry as well. I know of one that the jewelers have requested additional size denominations. Is work happening in that direction?
Yes. So 10 milligram is something that we will bring in as an additional denomination for trading, because the SEBI rules allow for a multiple of 10, which means 100 mg should be the delivery unit, which is possible for the refiners to support. So 10 milligram will be the base minimum trading unit. And we will announce this shortly.
All right. You're announcing it as you're talking to us, Mr. Krishnan. But, you know, apart from that, are you also offering any incentive, let's say, to households, to walls, to temples, to convert this physical bullion into EGRs?
No, so we are about to roll out a well thought through process for surrendering gold and for getting it converted into EGR. That announcement will happen within the next week or so, roughly. We are fine tuning and testing the app in this regard, and that will put to rest all concerns and questions around how this whole process will work. Personally, I think we need market makers to be deployed in the EGR segment to provide quotes on both sides in the initial few months. Once the liquidity buildup happens, then maybe there is no need for even the market makers. So as we see this now, I think we are in a good shape, and you'll see lots of transactions in the coming days and weeks ahead.
I understand one way of doing this is to ensure that physical gold is converted into EGR. But the second major point or goal that EGRs have is that India becomes from price taker to perhaps price maker as well, breaking the dominance of LBMA in some sense. How long would you reckon this would take, perhaps?
See, it depends upon how quickly various stakeholders get integrated into the EGR system. Now, we expect large refiners, large bullion dealers, the asset management companies, and even the jewelers to come into the system as early users of this whole thing. And in due course of time, the retail will come in as well. The family offices will come in. The temples will eventually come in. And what will essentially happen is that gradually the regulators may also give approvals for foreign participants to participate in the EGR trading, if not the withdrawal of the gold. So if that's the case, then I think it'll be a deep liquid market. It's a matter of time. And when we become a very deep liquid market with millions of trades happening every single day, that's when we can slowly start contesting the fact that we should be looked at as a price maker, because we are such a large market with so many participants and so many trades. So we will take some time to get there, but at least we are creating the pathway to get there.
Gold and silver in the recent days have seen import restrictions, various other restrictions as well. And then the AMFI data does show on the kind of outflows that gold and silver both have showed out. Would you say that the retail capital perhaps would start coming into EGR given the way the rules, regulations, the duties, etc. seem to be moving?
No, the import duty is 15%, and rightly so, because we want to discourage import of gold. All the more we want to encourage people to bring out the domestic supply of gold to the EGR market and to facilitate our consumption and activities around gold. What will happen is if we can even manage to bring out, let's say, 100 or 200 tons of gold in year one of the rollout of the EGR, that's a significant component of the total imports that India makes in a year. We import about 600, 700 tons of gold. So 100, 200 tons will be quite a big chunk of the total imports that we make in a year. So the idea is that if with this kind of track record, we get into year 2 and year 3 and so on, it's just a matter of time before all the local supply comes out to EGR, because people will realize that converting to EGR has so many advantages. Plus, possibly when the lending and borrowing is allowed, they can even lend their EGRs for a period of time and make lending fees as an incremental revenue, which they are not now enjoying from the gold that's just lying passively in their homes and other places.
Mm. You've inked a pact with the Steel Users Federation. Can we anticipate a steel derivative market or a contract soon?
Yeah, a few products are being discussed with the colleagues from the SUFI, and we will come out with the right products as and when we are clear about what the market really requires.
Welcome back to Halftime Report. Well, it's now time for a CNBC TV 18 exclusive. What we understand and what we are picking up from our sources is that one of India's largest sport companies, which is JSW Infra, is going in for a fundraising plan. We understand that the company is going to opt for a QIP for this particular fundraise, and we understand that this particular fundraise is going to be quite significant, and it's going to be in excess of 6,000 crore rupees. Why is the company going in for a fundraise? Number one, remember, the company has very ambitious capex plans lined up all the way till FY30, and also remember, the company's promoter shareholding is in excess of 83%. So this particular QIP or equity dilution will help the company bring its promoter shareholding below the 75% required minimum public shareholding norm. Now, in terms of the capex plans that the company has, 30,000 crore is the capex that the company has planned from FY25 to FY30, and in the next 2 years, FY27 and FY28, the company has capex plans lined up to the tune of close to 16,500 crore rupees. Remember, earlier this year, the company had taken a note from its board to go ahead and raise funds up to 25 crore shares, that is by diluting up to 25 crore shares. So on the back of that, JSW Infra is in focus. We've reached out to the management of JSW Infra. We are waiting for a response, but we need over 6,000 crores is what we understand from our sources that the company would be looking to garner. So it's going to be significant fundraising that's on the anvil.
Okay, significant fundraising is what we'll watch out for. JSW Energy, as of now, the stock is up 3.5% in the trading session. But with that, it's a wrap on this edition of Halftime Report. With the Nifty still around those 23,300 levels. Let's watch out for that come off from the day's highest point. But that's what we'll keep an eye out on. But with that, Vivek and I will take your leave. Thank you so much for tuning in. Up next, your business lunch.
Hopes of a US-Iran deal powers up stocks with mid-caps taking the lead. Financials, realty and consumer durables are prominent gainers.
Stocks of truck makers and financiers drive up as Brent slides below $89 a barrel. Indigo Airlines owner Interglobe Aviation is the top gainer in the Nifty index.
Stocks like MTAR Tech, NetWeb and Data Pattern soar on the SpaceX effect as Musk's venture seeks to mop up $75 billion at $135 a share in the world's biggest IPO in history. Early investors in the $1.7 trillion company are set to reap a bounty.
Gold rebounds to near $4,200 per ounce following a sharp drop after Trump says the Iran war is settled and subject to likely finalization of the next few days. Silver too regains some luster.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. You know, Trump's comments about a de-escalation in the war, a deal being almost finalized in West Asia between Iran and US is, you know, a big thing for the markets. The markets are up. However, oil prices below that $90 a barrel is also a big positive for the markets today.
That's the bigger positive, right? And even though this rhetoric over this possible deal, yes and no, and the back and forth, even though Iran has pushed back on the claims that Donald Trump has made, the hope will be that there is something substantial that does come out over the weekend. The markets are definitely looking to react positively to that. Although we are off the highs of the day, though, 130 points of the day's high, the important level on the upside is 23,361. That's the level that we need to close above for a weekly gain. Else we would end up in the red for 4 straight weeks in a row now for the Nifty. So that's the level that needs to be crossed on the upside for the index. Well, the banks are doing fairly well for themselves and they have outperformed the Nifty by a very comfortable margin all through this week. They have been the ones that have ensured that the Nifty has managed to protect this 23,000 level on the downside on the days of the sell-off. Even today, as the Nifty has come off the highs, it's 700 points higher on the Nifty Bank and has managed to hold on to at or near the day's highest point for the banking stocks.
Absolutely. And the mid-cap index too helping those gains today, right? That index nearly 1% higher in trade. And as Hormuz pointed out, it's the banks that are doing all the heavy lifting. Private banks leading the up move again. HDFC Bank up 2%, ICICI Bank nearly 1% higher, and Kotak Mahindra Bank over 1% in the green. Now, fall in those oil prices has pushed up stocks like HPCL, IOC, BPCL, all of them up over 1% in trade, between 1 and 3% higher in trade. On the downside, the only index that is, you know, mildly lower are those IT names. Although extending those losses, the index is now about 0.3% lower. We've got Tech Mahindra, which is down over 2%, Coforge down over 1%, and HCL Tech down over half a percent. So that's how the markets are shaping up today.
And yes, of course, that's the big development, the US-Iran war. That has been the big trigger all through this week so far. Now, US President Donald Trump has claimed to have settled the war with Iran, adding that the deal is subject to finalization of documents. Now, he says that the signing of this deal will happen soon in Europe. Listen into what he had to say.
We just made a great settlement of the war with Iran, and we're going to be subject to finalization of documents, which should get done over the next few days. We'll probably have a signing maybe in Europe, and it's a great thing. And I think a lot of good relationships can ensue from this. I just spoke with the leaders of many of the countries that were mentioned in the release. I just spoke to Bibi, I spoke to the head of great heads of nations, Qatar, UAE, and, Saudi Arabia, Bahrain, Kuwait, and others. And we're going to be talking to Turkey with the Strait will officially open as soon as we sign, which could be soon, very soon, maybe over the weekend. In Europe, I won't be able to be there, but JD will be there, Vice President, and some of the people.
CNBC's Dan Murphy joins us now with all the latest updates from West Asia. Dan?
I guess you could call it quite a dramatic turn in the Iran war, and of course a sharp market reaction to match. Stocks have soared and oil has sunk after President Trump claimed the US has made a great settlement of the war with Iran. He says a signing could even come within days and that the Strait of Hormuz will reopen the moment a deal is done. But of course, you flag this the crucial caveat to all of this is the fact that Iran is not confirming any of it. Trump says the talks have been brought to the highest levels of Iran's leadership and approved, yet within minutes of saying that, Iranian state media said Tehran had approved no text and no memorandum of understanding. In fact, Iran's Fars news agency went even further, casting Trump's move as a tactical retreat, even claiming it's the US that backed down, returning to Iran's own proposed text. Now, of course, just hours earlier, Trump was threatening to hit Iran very hard and vowing to seize Karg Island and take total control of Iran's oil. Then we saw this dramatic reversal, cancelling the strikes and also declaring a deal all but done. We're still gathering the details here, but there are some real politics signs of movement. President Trump says he spoke with Prime Minister Netanyahu and other regional leaders, and Netanyahu's office also confirmed that call, saying Trump committed that the final agreement will include the removal of enriched uranium, the dismantling of enrichment, limits on missile productions, and the cessation of Iran's support for proxies in the region. Interestingly, the statement also said that Israel isn't involved in this quote-unquote deal, which leaves some big questions about the day after plan as well. So investors are right to be cautious here. At the same time, the US naval blockade of Iran stays in place until any deal is finalized, and we have seen this movie before. In fact, the recent analysis shows that President Trump has said we're close to a deal more than 30 times since the war began, and each of those times diplomacy has failed. So let's see if this time it really is different.
As Dan said, we've seen this movie before. Dan, thank you for those updates there. Take a short break. More news and updates continue on the other side.
Welcome back. You're still with us on Business Lunch. The Tata Sons board meeting is underway. Sudarshan Kumar is here to tell us what's on the agenda. Sudarshan?
So as you have said, Tata Sons board meet is still underway, and some of the issues that are being discussed in today's board meet, we understand from sources that first, they are likely discussing appraisals of key personnel. Second, some company-specific updates. And third, it's the annual account of Tata Sons. As far as the important issue regarding reappointment of N. Chandrasekaran as chairman is concerned, we understand from sources that that issue is not on the agenda in today's board meet. Now, talking about the last board meet that they had on 26th of May, in that board meet, Noel Tata likely had raised certain concerns about the growth outlook for the digital business, that's the Tata Digital, for which Tata Sons management had sought approval for an equity infusion of rupees 7,000 crore. And Noel Tata had raised questions on growth projections being used to justify the investment. The outcome of today's board meet we'll get to know only by the evening. And we'll keep you posted on the same.
And thank you for that. We keep tracking the developments there at Tata Sons. But it has been 1 year since the tragic crash of Air India flight AI-171 in Ahmedabad, which claimed 260 lives. While compensation to most affected families has moved ahead, the big question, though, remains unanswered. What caused the crash? A preliminary probe pointed to the aircraft's fuel control switches moving to cut off shortly after the takeoff, but the final investigation report is still awaited. Shivani Bajaj has filed this report.
Well, it has been over 1 full year since the tragic crash of Air India flight AI-171 in Ahmedabad, a disaster that claimed 260 lives and left behind grieving families still searching for answers. On June 12, 2025, the London-bound Boeing 787 Dreamliner crashed moments after it took off from Ahmedabad, killing 241 people on board and 19 people on the ground, with only one survivor from the aircraft. A year later, the biggest question still remains unanswered. What exactly caused the crash? A preliminary investigation found that the aircraft's fuel control switches moved from run to cut off shortly after the takeoff, leading to a loss of engine thrust. But investigators are yet to explain why this happened, and the final report is still awaited 1 year after the crash. Meanwhile, compensation has largely moved ahead. Air India says it has paid 25 lakh interim compensation to 96% of the affected families, while 94% of those injured on ground, have received interim or final support. Separately, Tata Sons had promised 1 crore ex gratia support, has reached 91% of the deceased family. But compensation has also become contentious. Some families have raised concerns over legal paperwork linked to the settlements, while Air India denied any coercion, maintaining there is no deadline to accept the compensation. The tragedy also triggered changes in the aviation safety in India. Air India says it undertook a temporary safety pause, slowed operations to conduct additional checks on its Dreamliner fleet, and strengthened internal audits and employee mental health support as well. At a broader level, from the Ministry of Civil Aviation, India also moved to tighten aviation oversight. The government proposed and later notified stricter rules around buildings and obstructions near all airports in India, while regulatory scrutiny of aircraft operations intensified after the crash. But for many families, 1 year later, closure still depends on the answer: what really happened in those final seconds after the takeoff. But we'll have to wait for the final report to get those answers.
Well, on that note, it is time for us to head into another short break. More news and updates on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Wall Street is getting ready for the biggest listing in capital market history, with Elon Musk's SpaceX set to debut on the Nasdaq tonight. The offer, as per Reuters, has been oversubscribed 4 times, receiving $250 billion worth of orders for its $75 billion offer. The IPO was offered over 555 million shares at $135 apiece, valuing the company at $1.8 trillion. Hormaz has walked across to the wall to crunch some data on the listing and how some investors are set to make massive windfall gains. Hormaz, take it away.
It's a big day indeed. It's a historic launch for SpaceX, if you could call it that, on the Nasdaq today. SPCX will now become a publicly traded company. But we have all spoken about the IPO, the price, and so on and so forth. But today's story is more on the fact of capital allocation, patience, conviction, and more importantly, being at the right place at the right time. This $1.7 trillion market cap will make SpaceX the 7th largest US company by default in just the first day of its listing. Now take a look at the people who will be profiting the most and seeing the biggest windfall that they are going to get after their investments in SpaceX. The first one is Ron Barron of Barron Capital, who first made his investment in SpaceX in 2017 at a valuation of $22 billion. Now that stake is currently near $12 billion. That was the initial investment is now worth $12 billion, and SpaceX is now 33% of Barron Partners Fund and 23% of Barron Assets Fund. Of course, you're valuing that at the IPO price of 135. The other one is the Founders Fund by Peter Thiel. Now, they hold around 3% stake. The first investment came around, back in 2008, and they had invested around $600 million over multiple rounds, and that current stake is over $50 billion, which makes it a 62,000% return on the initial capital investment. Now, the third one is Alphabet, Google's parent company. They call SpaceX the hidden asset of Alphabet because they had originally invested around $900 million in a Series F round back in 2016. That $900 million is now over $106 billion, and that, of course, is a very, very significant stake, around 1 to 2% of Alphabet's overall market cap in itself. Now take a look at Fidelity Investments. They first, along with Alphabet, had invested in that same Series F round. They also led another $1.68 billion Series I round in 2020, and now SpaceX is a key significant holding. The Fidelity Contra Fund, it's 4.7% of their assets. For Fidelity Blue Chip Fund, it's 3.3%, and for Fidelity Growth Company Fund, it's 2.6% of their assets. For all of these funds, their assets under management are anywhere between $100 billion to $250 billion. The other is Andreessen Horowitz. They also led a $750 billion Series J round back in January of 2023, when SpaceX was valued at $137 billion. In 3 years, that amount is now 12x, and of course, they will be cashing in big time as well. Now, the other one is Cathie Wood, of course, known for her controversial take on a lot of other investments as well. Her first investment in SpaceX came in late 2023, the largest holding in the ARK Venture Fund, which is at 17%. And since that initial investment in January 2023, SpaceX's valuations have gone up 730%. The Ontario Teachers Pension Plan, they had invested $200 million as well via their investment vehicle in 2019, and they are sitting on an $11.5 billion windfall as of today for SpaceX. And lastly, the Washington University, they made their first investment back in 2016-17 at around $50 million, and now over 10% of their total endowment of around $17 billion is for SpaceX, which is the largest concentrated endowment for any university. Of course, before SpaceX has listed, analysts have also started to put out their coverages as well. Oppenheimer has initiated with an outperform rating, a 12 to 18 month price target of 190, and they say that the SpaceX's diversified portfolio makes it attractive for its investors. The other coverage comes from New Street Research. They too have initiated with a $165 target. They are viewing XAI as a $575 billion business, and they too are optimistic on this stock. The biggest winner of them all, Elon Musk. He's going to become a trillionaire, if not more. The SpaceX stake is $866 billion. The Tesla stake is $320 billion. And of course, this this is excluding certain options, and he controls almost the entirety of the SpaceX board, considering he has over 82% of the voting power at SpaceX. It's a big listing. It's going to be a historic moment. It's the biggest IPO in history, and there are definitely some big winners in this as well. So all eyes tonight are going to be on Wall Street when SpaceX becomes a public company. Before we move on, of course, let's also listen in to what Gwynne Shotwell, the president and COO of SpaceX, had to say about this listing.
I wasn't sure we would go public. Having a private company was important to us early on because we really weren't focused on quarterly financials. We were so focused on the long-term outlook for the company. But we've gotten so many of the building blocks completed for so many of these different business areas, it actually feels like the right time. We've been feeling over the last few years a lot of pressure from everyday Americans and our friends that wanted to buy stock. And there was just no way for these folks to get in. Unfortunately, probably some got scammed, but there was no way to buy SpaceX stock. And it feels like a company that, you know, great people should be able to own a piece of.
The FIFA World Cup 2026 is finally underway with 48 teams across 16 venues in Canada, Mexico and the United States, making it the biggest World Cup in history. The tournament kicked off with a star-studded opening ceremony at the Estadio Azteca in Mexico City, featuring pop star Shakira, J Balvin, Tyler and others. Co-host Mexico opened the tournament with a 2-0 win over South Africa last night, while South Korea edged past Cheshire 2-1 today. Canada will launch its campaign tonight against Bosnia and Herzegovina in Toronto with kickoff at 12:30 a.m. IST. USA will also kick off their campaign in the early hours of Saturday, taking on Paraguay at 6:30 a.m. in Los Angeles tomorrow morning. And on Sunday, Qatar will face off against Switzerland at 12:30 a.m., while fans will have to sacrifice some sleep to watch Brazil face dark horses Morocco on Sunday at 3:30 a.m.
All the football action on your screens. Well, it's going to be a busy weekend for a lot of these football
and long
fans.
nights for a lot of us.
Indeed. We take a leave on this edition of Business Lunch from Arundhati and me. Thank you so much for watching. Mid-Cap Radar on the other side.
Good afternoon and welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Vinny Botiwala. Good afternoon, Vinny. Well, what's actually transpired in the last 15 minutes or so is that there has been a very sharp recovery as far as markets are concerned. Nifty, Bank Nifty, all once again edging towards the day's highest point, and the broader end of the markets continue to outperform the benchmark indices.
Absolutely, and banks also continue to do well. IT is the one which is seeing a bit of a muted performance, but versus that, everything is in the green. On that note, let's talk about the top headlines for today. And starting up, we have the green sweep on the street, where momentum takes over. Mid and small cap join in the party. Gain across broad-based level, as well as only IT, which is the one sitting out.
UBS initiates a buy call on Motilal Oswal Financial Services with a target of 1,150 rupees a share, citing sustained non-linear growth on the back of AUM expansion. UBS expects assets under management between FY26 to FY29 to expand at a CAGR of 21%. The stock perked up in early trade.
UBS double upgrades Bosch to a buy from sell, hikes the target price to 45,530 rupees versus 27,920 rupees earlier, implying a 21% upside from the current levels.
After logging its worst single-day fall on record, shares of MTAR Technologies rally. Managing Director Srinivas Reddy tells an allay's concerns over Bloom Energy project delay tells CNBC TV 18 that the pause in the US data center project is speculative, adds that the company continues to execute high volumes for Bloom sequentially.
And shares of Equita Small Finance Bank gains after management reiterates confidence in the bank's next growth phase during the investor meet. The bank targets 20% loan growth over the next 5 years.
Well, welcome to Midcap Radar. Just have a look at the markets, especially some of the private financials in the last 15 minutes or so, surging away. Look at Axis Bank, that particular stock high by over 2%. HDFC Bank is the other stock that surged, and some of the gold financials that were beaten up quite significantly, names like Manappuram Finance and Muthoot Finance too, are among the top gainers. L&T Finance Holding is the other stock from the broader end of the markets that's perked up almost 6%. But these names and a whole host of other names is what Ria has on her radar. She's standing by the big wall with all the mid-caps that are moving around in the session.
Well, yeah, starting off with the gainers first, we have IFCI continuing its strong gain on the back of optimism from the NSE IPO. The stock is up nearly 76% just in the last 2.5 months. Autumn Investment also performing well on the back of strong volumes today, nearly 28 times the 30-day average volumes traded in today's trading session. MMTC also seeing strong gains of nearly 11% today. Aegis Vopak also gaining on the back of strong volumes, 5 times the 30-day average volumes traded today. And Netweb Technology is also up today, and it is up nearly 150% just in the last 1 year. Data Patterns also seeing strong gains today. The stock is up nearly 75% on a year-to-date basis. Also looking at some of their stocks that have hit their 52-week highs today. There's IFCI, Aegis Vopak, Bank of Maharashtra, Apar Industries, as well as Sai Life Sciences, both of which Apar Industries and Sai Life Sciences have also hit their all-time highs today. Looking at some of the losers in today's trading session, there's Chem India Projects taking a big hit after its 120% rally in the last 2.5 months. Signature Global also down today. The stock has declined nearly 41% in the last 1 year. OneSource Specialty Pharma also taking a big hit today. The stock is down nearly 18% just in the last 1 year, even after recovering nearly 45% in the last 2.5 months. And Uno Minda also seeing a strong decline today, as well as Sada Energy.
Okay, thank you so much for that, Ria. But as of now, like you can see, the market has picked up a bit more of pace, right? Look at the Nifty as of now. We're seeing it about 23,400 levels, about 23,425. Almost near the day's highest point is what it's moving and inching up towards. And this has come in the last 15 minutes since we've started the show. Around that time, we've seen that up move come in. But on that note, let's also bring on board Hemen Kapadia from DR Shok Sensex to take us through the technicals. What are we keeping an eye out on? Hemen, good afternoon. Thank you so much for joining us on the show. Markets have seen a bit of a spike coming in the last few minutes as well. What are the levels you're keeping an eye out on the technical front for the Nifty, as well as the Bank Nifty, which is doing well in the trading session?
A very good afternoon to you, Vinny. Thank you for having me on the show. It's always a pleasure. Bank Nifty has shown relative strength, didn't break the earlier bottom like the Nifty did, and it is following up on that. So Bank Nifty looks stronger without a doubt. it was shoring up and frankly speaking, salvaging the Nifty yesterday. Now it's taken lead. Looks good as far as the Bank Nifty is concerned. We had a resistance around 56,200. We're on the cusp of overcoming that. So that is a good sign. So that probably opens the doors for maybe 600 point further upside. As far as the Nifty is concerned, 23,420 was an important resistance level in Vinny. We just about sustaining over there. It's Friday, end of the week, so the weekly charts are being formed. I think we are heading towards 23,580, if not more. So things are looking better. And the VIX, okay, we haven't closed, but I don't think the volatility index in India has closed below the 15 level since probably somewhere in 4 months back. So everything seems to suggest, obviously based on the geopolitical issues getting solved, I think everything looks hunky-dory as of now. Further upside seems to be in the cards. Sustainability depends more on how these things play out. But as of now, the setup is looking good. The base has been formed. VIX is getting down. Vinny.
Well, Heyman, good afternoon, and what a rally we've seen in the last 20 minutes or so. Just before we ask you for topics, if we could just pull up the intraday chart of Larsen & Toubro. That particular stock has surged almost 3.5% higher. Remember, the company has over a 30% exposure in terms of order book as far as West Asia is concerned. That particular stock has spiked up quite significantly. But Heyman, what are your individual picks for the day? How are you playing today's upward momentum?
Okay, firstly, I'll start with the relatively easy one, Vivek. I'll go in with HDFC Bank. I mean, it's been a dead duck in the water, so to speak. It's done nothing. But on the other hand, that makes it safer. The stop loss is closer, not much to lose. So I think frankly speaking, it's a screaming buy at these levels. So one can buy HDFC Bank. Okay, it just moved up in the last 10 minutes or so. So one can buy HDFC Bank at what? 765, stop loss of 745, target of 805, deeply oversold, downside limited, positive divergence. Everything seems to suggest we are setting the stage for a decent, if not a good bounce. So a buy call on HDFC Bank, Vivek. And secondly, a buy call on Godrej Consumer Systems. Godrej Consumer Products. Right. Same logic. The oscillators have given a crossover buy, a base formation in place, very strong support at 980. Not only the daily, even the weekly oscillators seem to be supporting the move. So buy call on Godrej at around 1020, stop loss of 1000, target of 1060. Vivek.
Okay. Heyman, thank you so much for joining us this afternoon, taking us through the individual names as well as in terms of levels for the market. And on that note, let's just take a quick look at the Nifty because it is inched up furthermore in the trading session as well. Now near the day's high is what the Nifty is trading at, around 23,461. And in terms of the contributors also coming in from the banking side, that's the one, private banks specifically, some of the names that are trending higher right now. We are seeing ICICI Bank, HDFC Bank, Axis Bank, all of them are among the top contributors. Nifty Bank is also trading at the day's high. So keep an eye out on that, as well as we have L&T that's supporting the up move right now for the Nifty. So these are something Reliance too participating in this up move, and that is why the Nifty is at the day's highest point. Now, in the last few minutes itself, we've seen it move up some 30-40 odd points. On that note, we're going to slip into a very short break. We will come back and focus on Equitas Small Finance Bank as well as JSW Infra after the break. So stay tuned in. Welcome back to Midcap Radar on CNBC TV 18. Nifty is inching up further as well, and day's highest point is what the markets are trading at. Bank Nifty is what is leading the charts. But on that note, let's put the spotlight on the Midcap Spotlight segment today that we have, and we'll be focusing on Equitas Small Finance Bank, which is surging after the investor meet that they had. We have Ananya, who is joining us to take us through the details. Afternoon, Ananya.
Afternoon. Well, yes, Equitas is surging after the investor meet reinforced the confidence in the bank's long-term growth story. Now, what's interesting here is that after spending much of FY25 and FY26 dealing with microfinance stress and elevated credit costs, the management is now guiding at 20% plus loan growth over the next 5 years, while keeping microfinance exposure capped at around 10% of the loan book. Now, the bank also highlighted that FY27 could be an operating leverage inflection year, with most investments in branches, technology and compliance already behind it. Management sees a steady state return on asset of around 1.5% with potential to move closer to 1.8%. Growth is expected to be driven by small business loans, affordable housing and gold loans, with the bank planning to add around 100 gold loan branches. Affordable housing has already delivered nearly 46% CAGR. On the liability side, Equitas is strengthening its NRI franchise, while cost of funds has declined sharply from 12.7% in FY17 to about 8.2% in FY26. But perhaps the biggest trigger is the proposed universal bank transition, with management indicating that the application could be filed in the next couple of quarters. So investors are now betting on not just on improved asset quality, but on 20% plus growth story, profitability, and the proposed universal bank transition.
Ananya, thank you so much for that. That is Equitas Small Finance Bank holding on to gains in the trading session. But let's talk about JSW Infra as well. And seems like QIP is what maybe we could see coming in the works, Vivek.
Well, that's right. You know, some time ago, we put out this exclusive news break. It's a CNBC TV 18 exclusive. We understand from our sources that JSW Infra, has gone ahead and likely to raise a little over 6,000 crore rupees. This is going to be done via the QIP route. Remember, earlier this year, JSW Infra took its board's nod to go ahead and raise funds, and they were looking to issue close to a little over 25 crore shares. So they have the board nod in place. We understand that talks are on, bankers have been appointed. Why does the company need the funds? Well, it's a two-pronged approach that the company, or they're looking to kill two birds with one particular stone. What is it? Number one, capex. They have significant capex lined up, almost 30,000 crore of capex lined up from FY25 to FY30. In the next 2 years, they have capex of close to 16,500 crore that the company will need to go ahead and raise funds for. Along with that, remember, the promoter shareholding in the company is in excess of 80%. So this particular equity dilution will help the company go ahead and meet SEBI's MPS, which is the minimum public shareholding norms. We've reached out to JSW Infra. We are awaiting a response from them, but a little over 6,000 crore rupees is what the company is likely to raise via the QIP route. And we understand that this particular fundraise could be done as early in this particular month itself. JSW Infra, after that particular news break, has surged almost 6%. But remember, the QIP could come in at a slight discount, but we understand that the demand has been quite robust from long-only institutional funds.
Okay, Vivek, thank you so much for that. JSW Infra surely holding on to more than 5% gains. But look at the flashes at the bottom of your screens. We have this coming in from sources. And as of now, markets surely have seen an uptick. We saw that crude prices, that's also seen a downtick coming in, a sharp fall coming in the last few hours as well that we've seen. Crude is somewhere around $87, 87.14, which is the lowest levels that we've seen coming in since April 17th. So important to watch out for crude as we are seeing that recovery coming in the markets. And, now the Nifty is just very close to the 23,500 level. So that will be key to watch out for.
We'll just address the flashes on the bottom of the screen. It appears also there has been some progress as far as the conflict between US and Iran is concerned. We just flashed saying that Bloomberg has quoted an Iranian agency called as MER agency, and it appears as though the US-Iran MOU stipulates that there could be a reopening as far as the Strait of Hormuz is concerned within the next 30 days. that could explain why we've seen such a sharp recovery in the markets, especially in the last half hour or so. All of these flashes are, we've seen these flashes on the Bloomberg terminal, and that is what we are putting out for our viewers. It's a significant relief, especially as far as a whole host of Indian companies are concerned, given the kind of strife that they've witnessed on account of the blockage as far as the Strait of Hormuz is concerned. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, sources tell CNBC TV 18 that IRDAI has called for a 20-year distributor-wise payout data. Yes joins in with the details.
Well, Vivek, this all branches out from that important statement which IRDAI chairman had given to CNBC TV18. That was on 20th May, remember. He had said that the consultation paper, when it comes to distribution regulations, that is expected in a maximum of 4 weeks. As I said, that statement was given on 20th May. Today is June 18th, which means, as per that statement, we have just about 1 week to go for that important distribution consultation paper, which will have commission regulations to be released by the regulator. Now, there are two important details which we picked up from our sources. The first one is that the market regulator just about a week ago has asked all insurance companies, this includes life insurance companies, general insurance companies and health insurance companies, for a 20-year distributor-wise payout data. Now, there are two important things to note here. One, this is the payout data, not just the commissions data, which means everything beyond commissions which have been paid to distributors have also been sought by the regulator, and the period is quite lengthy for the last 20 years, and it's distributor wise, which means through bank assurance, not just how much you paid towards bank assurance, but how much you paid to individual banks as a total payout, how much you paid to individual web aggregators through a total payout, how much you paid to agents, as a total payout has been sought for 20 years. What we've been given to understand is that the regulator not just wants to plug commissions, high commissions, which has been concerned for it, but also any kind of payout which the regulator has found instances is paid to distributors under the name or under the definition of commissions. And the regulator feels that by plugging in the total payout or keeping a watch on it and restricting it is when true, prices will be able to brought down as far as the commission regulations are concerned. Also, we've been given to understand is that the tightening of commissions could be based on efforts or effort-based model, where the hierarchy could be agents to banks to web aggregators, which means higher amount of commission limit could be given to agents, but a lower amount of commission limit could be given to web aggregators, because the regulator believes that the effort is the highest at the agent level and lowest, let's say, at the web aggregation level.
Okay, Yash, thank you so much for joining us and giving us the update there. But on that note, we're absolutely out of time on this edition of Midcap Radar, with the Nifty near those 23,500 levels and the Bank Nifty seeing more than 1,000-point uptick in today's trading session. But with that, we're absolutely out of time. So thank you so much for tuning in. Up next, you have your stocks.
Hello and welcome to Your Stocks live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan and with me as always Vinny Motiwala. Good afternoon, Vinny. The de-escalation in that war in West Asia, with Trump saying that there could be hopes of a deal being signed this weekend, has helped prop markets higher around the world and in India as well. In the last 30 minutes, we've seen the Nifty recover 150 points for it to breach that 23,500 mark, which is what everyone has been watching, right? 190-point recovery in the last 30 minutes is what we've seen. And the hope is that the Nifty can end above those levels. And the markets are firing on all fronts, right? The Sensex is seeing an uptick about 1,200 points. The Nifty Bank is the biggest contributor to this up move that we're seeing in the Nifty. And Kotak Mahindra Bank is one of those stocks. So if we bring that up for you, if you look at the Nifty Bank, it's recovered over 600 points from the lows. Kotak Mahindra is above 2%, higher by 2% in trade. So that's doing really well. Private banks in general, all of them doing well. ICICI Bank, Axis Bank, HDFC Bank, all of them higher in trade. PSU banks also doing well. If you look at the only downside in the market, that is coming from that IT pack, right? That's also 0.1% in the red, but that's the only red we can sort of see in the market today. That's how it's shaping up. So it's a good afternoon for the markets as we speak.
Absolutely good afternoons. 23,500 reclaiming that level for the Nifty. And obviously in the last 30 minutes, we had also some Bloomberg quoting the Iranian agencies, mayor agencies, where they said that US and Iran MOU is stipulated for reopening the Strait of Hormuz, and that's why the Brent crude oil prices that started coming down as well. Markets started going up. So obviously those negotiations, positive side of news flow coming in, at least from there, is keeping the markets on the positive end. But on that note, let's get started with all your stock-related queries. And we have Nirav Chedda, AVP, Derivatives and Technical Analyst at Nirmal Bang Securities, as well as Shaina Mukaddam, Independent Market Expert, to answer all your stock-related queries. Shaina as well as Nirav, good afternoon. Thank you so much, as always, for joining us on the show. And we're going to start the show with the caller query that we have today. This is coming in from Dr. Rajiv Sharma, who's calling us from Hyderabad. He's a long-term investor and he's bought MRF shares for a while that he's been holding on to. Let's go across to Dr. Sharma to take us through the query. Dr. Sharma, good afternoon, and take us through your query and how long have you been holding MRF for?
Hi, good afternoon. I have 20 shares of MRF tires bought at 20,000 rupees each. I would like to know, should I hold, buy or sell?
Okay. Dr. Sharma, thanks for your query. 20,000 means you've been a long-term investor and have been holding it for a very long time, at least a decade seems like it. But let me take it to Shaina. You know, the viewer, Mr. Sharma, Dr. Sharma has bought it at 20,000 levels. Wants to know if you should continue to hold, or even is there a chance to add more, or just book out some profits?
I will say continue to hold. Dr. Sharma has made a good investment for the longer term, so I would keep it in the portfolio. It's got a strong balance sheet, strong management. I would say that even in terms of the profitability and business performance, it should improve, because what we've seen is that raw material cost prices had moved higher and they have taken price increases to set this off. Also, hopefully, there will be some sort of settlement, permanent settlement in the Middle East. And that, I think, should be a very positive thing for the stock MRF, both in terms of raw material availability, as well as, of course, improved exports. Tire sales also doing pretty well for them, both in CV as well as PV. So I would say hold as of now.
So you would say hold. Nirav, if I could come to you, 20,000 rupees is what it was bought at, 20 shares, big profits there. Should he continue to hold, book out some profits, or even add more?
Yeah, hi everyone. The best returns that he's got is by holding. And I would also suggest to just hold on. There is a consolidation which is going on in the counter from a longer term point of view, but it is near the end. The consolidation started in 2024, early 2024, and now it is near its end. I believe it should take good support around the 1,20,000 odd levels, and then from there on, it can probably move up above the 150 odd mark and go towards the 2 lakh mark. So you can continue to hold on. I don't see anything negative really happening for this stock at this point of time on the chart as well. So yeah, I mean, you can probably add around 1,20,000 levels.
You can add at 1,20,000 types. Okay.
All right, so you can add at 1,20,000 is what you're saying. Now, MVS Rao, that's the next query that's coming in. MVS Rao, who's writing to us from New Delhi, he wants to know if he can take any sort of fresh entry into E2E networks for the long term. So, Shaina, in the long term, does this look like a good bet? The stock is currently trading at 379 rupees.
Yeah, Rundhati, the long-term prospects for the stock remain strong because they are in a very high growth segment. There's a lot of demand in India to set up data centers. And E2E is actually they're providing the Intel B200 as well as now expanding into the B300. So I think long-term prospects remain good. I would say for the shorter term or medium term, expect some sort of consolidation. In fact, even could be some correction consolidation because in my view, the short-term valuations are on the higher side. It is a bit expensive. Even if you see on a EV to EBITDA of FY28, in my view, it's about 20 to 23 times, which is a bit expensive for the shorter term. So I would say if you want to add it only at lower levels. I would not advise adding it at current levels, at least if you're looking at the next 1 year view.
Okay. Add at lower levels. As of now, do not look at it. At least that's the 1 year view coming in on the fundamentals. On the technicals, Neerav, what's your view for E2E? Fresh entry, is that something that you could look at this level? And if not, what level would you suggest for the long term?
So, see, on the charts, there is a double top kind of a formation, even after a big consolidation for this stock. So, which is not very good. So, confirmation for this is still pending, but definitely, I believe there are two levels where you can probably start adding for the long term. The first one is around the 280 to 240 mark, which is a very good demand zone for this stock. There is a likelihood that this stock is going to come at those levels, even from, at current levels. So that is where you look to add, or on the breakout of the 500 levels. 500 has been a very important resistance zone for this stock, and unless that is broken out above, I don't see much upside coming in. So both these levels are quite far off at this point of time. So definitely I would suggest from a long-term point of view, just hold on, let the levels come, and then look to add.
Okay. We'll keep an eye on those levels over there, Neerav. But let's move on, talk about the next stock and the next query for today. And that is Sriram, who's writing to us from New Delhi. And it's on Sterling and Wilson. He's holding 150 shares of Sterling and Wilson Renewable Energy. This is at a price of 228 rupees. So they're making some bit of a loss on this one. The stock is trading at 206, 207 right now. He wants to know the 1 year outlook for the stock. So 12-month time period is what he's willing to hold on for. Shaina, your view and suggestions for Sterling and Wilson?
Yeah, so I think, after that huge correction that we've seen in the last 2 years, and actually this is on back of, the excellent performance that they had shown in FY25. And then again, FY26, it has slipped into losses. And even in the previous, if you take a 5-year period, the only time they actually reported a PAT was in FY25. And that is reflected in the stock price. Having said that, the fourth quarter of FY26 showed us that yes, they can, do very well in terms of profitability as well as revenues. Basically, what is happening is that being in the EPC business, though they have huge contracts, they have got a very good order book of 11,000 crores. If you compare it with their FY26 revenues of about 7,500 crores. So the pipeline and the order book is strong. They are maintaining good revenue growth. But in terms of EBITDA and profitability, it is, there is a lot of fluctuation, and you're likely to see this continue to happen going forward. So I would say that, in terms of valuation also, since it's not very expensive, wait for a bounce, but I would suggest a switch at any bounce, because in terms of longer term, I think there are better opportunities available, including something like an L&T, which is a close partner of Sterling and Wilson. So I would say you can switch at any bounce.
So you're saying you can switch at any bounce, and that's what he should do with this stock. Neerav, as Shaina pointed out, they have quite a strong order book, and they've seen some wins in the recent past as well. So what would you say to do with this stock? Should the person hold, or should he sell at this point?
So, see, looking at the chart, I think is the right time to average out. This stock has seen a huge amount of time and price correction, and finally a reversal is in place along with very good volumes. So I definitely believe one can look to add positions at current levels. You can keep a stop loss of around 180 for your longs, and there is a good likelihood this stock is going to go up towards the 265 280 odd range, which is where you look to book profits.
Neera, point taken there. Maybe we'll watch out for those levels over there for Sterling and Wilson. A quick check just in terms of Brent crude prices, right? They're just around that 86, 85, 86. They're trading in that range right now. So that's Brent crude oil for y'all. That's also seen a significant downtick, in the last 30 odd minutes, now at 85.97. Watch out for that while market continues to trend upwards in the day and at the day's highest point. On that note, we're going to step into a very short break, and after the break, we'll come back with more of your stock-related queries. Stay tuned in. Welcome back to your stocks on CNBC TV 18. Markets continue to inch up higher. Brent continues to move lower in the trading session. But on that note, let's continue with your stock-related queries. And we still have with us Neerav Chadha of Nirmal Bang Securities, as well as Shaina Mukaddam, independent market expert, to answer those queries. Keeping it going now, the next query we have is coming in from Sailesh Singh, who's writing to us from Punjab. He's holding 200 shares of Tata Motors CV. Average price is around 140 rupees for him. Wants to know to exit the stock in the next 3 months? And what is the next bet that maybe he could look at if he looks to exit? What's your suggestion? Continue to hold or exit is the option that you would suggest, Shaina?
I would continue to hold. And if he wants to exit, then maybe he can look for a good bounce to exit. Because I think, again, to go back to the Middle East, I think if some settlement does happen, most of the stocks related to the auto, especially OEMs, will do better. And I would say Tata Motors CV is doing very well. If you saw the May numbers, they grew by about 17% in terms of volumes. And I think their growth also will be supported from EVCO. So all in all, I think in terms of overall growth, next 2 years, they could do about 15% lower double-digit growth, but good, decent growth both in EBITDA as well as profits and even revenues over the next 2 to 3 year period. So balance sheet is also strengthening. I would say hold if you're a long-term investor.
It's a hold if you're a long-term investor. Nirav, with the West Asia tensions sort of easing or hopes of it easing, what do you think he should do? He is making a profit on it. Should he continue to hold, or are there any levels that you could give him to exit at a good price?
Yeah, so I think you should hold on. 360 you can keep as a trailing stop loss. If that is hit on a closing basis, just exit it on the downside. Otherwise, I believe the stock can come towards the 425 430 odd band, which is where you can look to book profits.
All right. So those are the levels at which he can look to book profits. There's just some news coming in. The FSSAI has issued a notice to Nestle over alleged detection of insect and larvae in their Maggi packet. So right now, that's the information we have. The FSSAI has issued a notice to Nestle. That stock now falling in trade. It's about 0.8% in the red, and we'll have to wait and watch for further information on that particular issue. So that's what's happening with Nestle India as we speak. That stock down 0.8%. Now, moving on to the next query. Amit is writing to us from Mumbai with an investment query. He wants to know if this is the right time to buy shares of PNB Housing Finance. He also wants to know the target for a short-term period of 2 to 3 months. Shaina, let me come to you for the fundamentals first. Is this a good bet to enter? Is this a good stock to sort of buy at this point in time?
Well, I mean, valuations are not expensive. If you look at price to book, it's about 1.3 times price to book current year. So going forward, I think growth in housing also as well as PNB is likely to remain pretty decent. I would say yes, you can buy, but I would prefer buying it at dips.
Oh, you were making a point there, Shaina?
Yeah, so I said I would prefer buying it at dips.
Okay.
Valuations are not very expensive. It's about 1.3 times price to book. So you could look to add it at dips.
Add it at dips. That's the word coming in there. Nirav, this is a short-term query, right? So what should the viewer do right now?
I would suggest to avoid buying if you've not done already. Why? Because this is in a range, upper side 1100 and at the lower end around 800. This is what the stock is doing. At this point, 1100 was hit and it is coming down. So I would suggest, wait on till 850, 800 level comes in. That is when you look to buy, but not at current levels. Other than that, if you want to buy something right now, HDFC Bank seems to be a better bet because I believe banking is doing well and this has been a laggard. It is now catching up. It has given a breakout as well. So you can probably expect good returns for the next 2 to 3 months in this stock.
Okay. Thanks so much for that, Nirav. But let's move on. And seems like a lot of notices are going across from FSSAI. And this is mainly they're saying they're taking cognizance of what's coming on social medias or the reports. Someone has filed a complaint. So a couple of news was coming in. Apart from Nestle India, we had seen for KFC as well and other names there. So keep an eye out on that one. Nestle is now down 2% in trade. We'll wait out for more details on this one. But next query for today, we have Neha, who's writing to us from Bangalore. She's holding Shivalik Biometal. It's not a stock that we normally talk about, but she's holding it at a price of 540 rupees, making a profit on this one. Wants to know the target price of the next 1 to 3 months. But on the fundamentals, how is this one looking like, Shaina?
Since she's a short-term investor, I think she can partly book her profits because valuations are expensive if you look at on an EV by EBITDA basis 1 year forward. Having said that, the opportunity remains quite stable for the company. They're doing reasonably well also, as we saw on the FY26 numbers. And they're basically suppliers to two-wheelers, three-wheelers. The EV segment is something that is actually driving their growth. They're also into metering, into the smart metering segment. So I think over a period of time they should do well, but I would say it's expensive. So short term, you can take some profits off the table.
So you can take some profits off the tables. Nirav, coming to you, any targets or levels to watch out for? Should he book the profits that he has or continue to hold? And he wants a short-term view.
I think should continue to hold. Why? Because the stock has got a 3-year breakout above the 680 odd levels, and there's a good chance now the stock again can move up towards 750, 800 odd zone. The stock had come down to retest the breakout, which it has done. So one can continue to hold the stock. You can keep a stop loss of 665 for your longs and expect 758 to 800 to come in very soon in the short term.
All right. Okay. So the next query is coming in from Venkat. He's writing to us from Telangana, and he holds 2,000 shares of Central Bank of India, which he bought at 63 rupees. He is making a loss on the stock. It is currently at 30 rupees. He wants to know if he should add more shares to average out or sell at current levels. So Shaina, what's your view on the stock? Is there any up move expected for it?
The major issue in terms of the upside that can be from here, at least for the shorter medium term, is the government holding, which is about 81% holding in the central bank. I think that is the overhang that will remain and which may see the stock not give you the sort of performance it should, because in terms of valuations, it is pretty expensive. It is pretty attractive. It is price to book, if you look at it, is just 0.7 times price to book. And if you saw the performance all through, both in terms of asset quality improvement, in terms of growth, in terms of management guidance, everything remains pretty strong. So I would say you can continue to hold for an upside, but adding it at these levels, you need to watch out for any excess liquidity that happens.
Okay. And Nirav, your view coming in for Central Bank of India, they bought it at 63 rupees per share.
I think you should average it. Why? Because 2-year consolidation is done from 70 odd levels. The stock has come down, so it's halved already in the last 2 years. And this level around that 30 to 28 has been a long-term support zone for this stock. So looks like a good level to average out. You can keep a stop loss of 26 for your longs and expect something in between 38 to 42 to come in soon. Once that comes in, you can probably book out the average shares and continue hold the earlier ones and then book it around the 60 levels.
Okay, Nirav, thanks so much for that. But that was the last query for today. So Shaina as well as Nirav, thank you so much for joining us on the show. Hope you all have a great weekend. And talking about weekend, every time, Arundhati, we go into a great weekend and that positive side with the news flow on West Asia. Hope today's news flow actually continues, because now the Nifty is at 23,530 levels. Brent crude prices have come down significantly as well. Absolutely. I hope no Monday blues coming in here.
Hopefully no Monday blues, and we'll see a deal that has been signed. That's what all the reports are indicating.
At least positive news continues through that as well. Rupee extending gains as well is what we can see at the bottom of your screens for y'all. But as of now, Nifty at the day's highest point. But with that, that's all the time we have on this edition of Your Stocks. Thank you so much for tuning in. Do remember, you can email us your queries. You can WhatsApp us your queries on the phone number that will be on the screens for y'all as well. And we'll address them with our experts on Monday, Wednesday, Friday. So stay tuned in. Last hour of trade is still left, and you have closing bell up next.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
The Taiwanese index is up 2%. The Hang Seng is up 1.5%.
Should get done over the next few days. We'll probably have a signing maybe in Europe.
And the decision to raise rates is robust across a range of scenarios.
Oil is at about 89, and this is, of course, on the back of positive US-Iran headlines. You've got about 4 or 5 Nifty stocks which are in the red: ONGC, Tata Steel, Coal India.
There are a lot of skeptics on Wall Street on this IPO, but regardless, this IPO has at least got demand.
They are on track with everything. There is no such delays as far as we are concerned. We are right on track.
If India gets included into Bloomberg Global Aggregate Index, then we could gather more foreign capital inflows.
As far as the important issue of reappointment of N. Chandra is concerned, it's not on agenda as yet, and this information is also through sources.
Well, the markets have started off on the front foot. They're holding on to gains, and the bulls would hope that this week at least ends on a high.
Why is the company going in for a fundraise? Number one, remember the company has very ambitious capex plans lined up all the way till FY30.
This $1.7 trillion market cap will make SpaceX the 7th largest US company by default in just the first day of its listing.
Very sharp recovery as far as markets are concerned. Nifty, Bank Nifty, all once again edging towards the day's highest point, and the broader end of the markets continue to outperform the benchmark indices. Significant relief, especially as far as the whole host of Indian companies are concerned, given the kind of strife that they've witnessed on account of the blockage as far as the Strait of Hormuz is concerned.
Well, that was this day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and with me, Hormuz is joining in today. Hormuz is that sort of a day, so we said let's get Hormuz in. What a big party today, right? Hard to fault today's trading session. You look at the screen, it's green. You know, as you can see, the headline indices are doing well. The breadth of the market is good. You would like to say, some days we say, well, the rupee is not doing too well. Today, the rupee has pulled back. The rupee is, down closer to around the 95-odd mark. The yields have cooled off. Crude oil prices have cooled off as well. Hormuz, we're ready to get the party started.
And what better a day to do it than Friday, right? We were not very wrong in the morning when we said that it's Friday forward today, and it's showing up on the screens as well. 400 points higher now on the index, and everything that could possibly fall into place is falling into place now for the markets to move higher. Oil prices are cooling off. The currency is appreciating as well. The banks are doing the heavy lifting as they have done all through the week. It's the Nifty Bank that has been the big outperformer this time around. 1,500 points higher on the Nifty Bank, and the one that ensured that the Nifty A defended that 23,000 mark on the downside, and now it's taking the index higher today.
Well, Hormuz, a couple of points here. I recall for the last few weeks, I've been making this point when the FIFA World Cup starts. That time this war will come to an end. I got lucky, I'll tell you why. Because actually it's coincided with Mr. Trump's birthday, which is over the weekend. And it seems, at least as of now, the World Cup has started. Not too much excitement globally on this FIFA World Cup. But at least, we're seeing strong signs of de-escalation, which you like what you see, both for the good of humanity, for the good of equity markets as well. And it seems that we're on our way. And for India, the big irritant has been the crude oil prices, which have cooled up. The rupee as well has, pulled back a little bit. And as we speak, Hormuz, as we're having this chat, the Nifty has gone ahead and taken out the 20 DMA, which is very, very encouraging.
Yes, 23,542 was that level, and we've gone past that as well. So great going for the index. Definitely ending the week on a positive note. So you'll end a 3-week losing streak as well on the index. Well, a great time to ask how should you be positioning yourself in the final trading hour. Bonanza Portfolios Mitesh Thakkar is here with us with his closing strategies. Mitesh, good afternoon. It's turning out to be a good afternoon indeed for the index now that we are above the 20 DMA. There's 23,800 now within sight for the Nifty. That and of course a view on the Nifty Bank as well, more importantly, because that has been the big outperformer, and your closing trades as well.
Good afternoon. So, actually, I was suggesting this for last few days, and today in the morning also I mentioned that it will be the Bank Nifty which should lead. And the first target was around 56,000, which was met around the opening time itself. And then I suggested 56,900 to about 57,000. would be the next logical target. I think we are heading towards those levels. So positive setup on the Bank Nifty. Around this 57,000 mark, there's a historical gap, which I think was done on the 23rd of April. So you might see some profit booking happening over there. But the pattern of the chart setup is definitely improved. And I think eventually, maybe after a few hours of selling or a day of pullback, I think the Nifty Bank should head higher. And the highs of 21st of April, which is 57,500, should be tested and taken out. And beyond that, I think we are looking at a test of 58,000 to 58,300. So positive on financial news. And actually, it will be the Nifty Bank which should propel the Nifty higher. The Nifty also has cleared the first hurdle at 23,400 zones. And now I think looking at 23,630. Possibly once we cross that, then I think, 23,900, 24,000 should be the level which the Nifty should eye on the upside.
Got it. Okay. All right. Mitesh, Mitesh, I'm just wondering.
93.
Yeah, Mitesh, we missed that call, that you were giving us. But, Mitesh, I was just wondering, normally at around 7 p.m., I look at the flows data. I'm wondering whether or not these FIs are going to come back. On an average for this month, they have sold around 5,500 crores. Yesterday, it was down to around 2,000 crores. Wondering whether they're coming back in today's trading session. Let's see how that goes. But you were giving us a couple of stock calls. Please go ahead.
Yeah. 23 for
Okay. You seem to have...
Stop at 146 for targets at 158.
Mitesh, you might have to repeat your calls because there was a patchy line. It'll be great if you could repeat them.
Okay, I'll tell you what, Hormuz. We'll go back to Mitesh for his calls. For the time being, I think Ria has joined in. She's going to tell us about the big mover of the last 48 hours or so. MTAR Tech, yesterday the stock was down. Today, in fact, it's popped back out, up after the management gave us clarification here on CNBC TV 18. Ria, run through the news flow, and also if you could sneak in, what are the valuations looking at like right now?
Well, absolutely, Nigel. Firstly, MTAR Tech has completely reversed the losses that it had made yesterday. Today, it is up 13% after the 12% fall yesterday. Now, yesterday, the stock had tanked after reports said that its key client in the US, that is Bloom Energy, was facing an abrupt pause in its data center project, which was a 1.8 gigawatt data center initially being built by Crusoe Energy. And this was tied to the company's fuel cell deployment pipeline. Now, the facility is going to be powered by a mix of Bloom Energy's fuel cells as well as grid electricity, and the project is going to deploy around 900 megawatts of behind-the-meter fuel cells from Bloom Energy. Now, the reason that MTAR Tech reacted to this news is that the company derives roughly 55 to 65% of its revenue from Bloom Energy, and MTAR is the key strategic supplier to Bloom Energy, supporting its solid oxide fuel cell as well as its solid oxide electrolyzer programs. And today, in fact, after this news came out, the management clarified to CNBC TV 18 that there has been no pause in the data center project that they are aware of, and the data center pause is complete speculation as per them. They've also said that they remain completely on track with their orders, and there are no pauses on the project as far as they are concerned. And in fact, they've also highlighted that they are executing much larger volumes sequentially for Bloom every quarter. And in fact, overall, they've already received roughly 2,800 crores worth of orders in this quarter itself, surpassing their full year order book target of 5,000 crores. They've also mentioned that their guidance for FY27 remains intact. They have guided for an 80% revenue growth for the year and with 24% EBITDA margins for FY27. And in fact, the stock has been performing very strongly over the past 1 year. The stock is up over 4.2 times, and currently, in terms of valuations that you are asking, it trades at a PE of 102 times on a 1 year forward basis compared to its 2 year historical average PE of 52 times. So it has been a strong run for the stock, but the valuations are quite expensive. But nonetheless, let's also go across and listen to what the management had to say about the news.
We are on track with everything. There is no such delays as far as we are concerned. We are right on track, and in fact, the customer is breathing down our neck to ramp up quickly and quickly implement the capacity expansion plans. Crusoe is it's been completely it's a complete speculation by disbelievers. It doesn't make any sense to us at all. We have no such indication of what everyone is talking about. Absolutely not. We have very clear forecast over the next 5-6 years. It's not that just for 1 year or 2 years. So Everything is being done based on clear forecast that we have and what we need to do over the years. We are doing much larger volume quarter-on-quarter basis. We are growing every quarter, which I have said earlier, and we stick to our guidance, what we have given. Announced in the stock exchange is more than 2,800 crores, I guess. We're already there, roughly close to about 5,000 already in this quarter. If you look at the absolute numbers, all our other growth engines like aerospace, nuclear, oil and gas is kicking in right now. So they're growing in the absolute numbers very well year-on-year basis. So fuel cell can grow much faster in a bigger volume, but that doesn't mean the other sectors, the absolute numbers are not growing. They are growing very well. So we are fine with that.
Management of MTAR Tech recovering everything that it lost in yesterday's trading session. In fact, a lot more than that now. 13.5% higher on the stock, 71.41. Of course, the record highs are 84.49. So, of course, it's still well below those levels, but a significant recovery from yesterday's losses nonetheless. Dilip Bhatt, the founder of Pedigree Advisors, is now joining in. Dilip, good afternoon. Thank you for joining in. Well, you've seen the developments that have taken place over the last 60 minutes with things. Would you be brave enough to say that, okay, things are now finally starting to fall into place for India and for our markets, and with the de-escalation, the fall in oil prices, the FIIs would finally look at allocating some of the money that they have been pulling out dime to the dozen all through the year?
Good afternoon. I think with all the kind of questions that you have asked, the final point just seems to be whether it's still going to bring in FIs back into India. But I think if you were to just step back a little and just see, I think overall, finally, if this is going to be signed, I think the much needed relief rally probably is already underway at the moment. And a lot of it is being seen, and maybe it will continue if this momentum continues, along with some short coverings. The question is whether the valuations at whatever level the Nifty settles, say maybe 1,000 points more, are the valuations comfortable, or whether this is one of event kind of a thing which will see a strong headwind beyond a particular level for the Nifty. So I think the valuations seem to be definitely not attractive. It is definitely very challenging at the moment. And I would think that the peak negativity about FI's sentiment which is prevailing, hopefully that will subside. Hopefully they will stop at least selling. So that itself will help markets to give much more confidence, breathe much more easier. And I think going forward, maybe if they come back, that's a very wishful thinking, I would say. So I'm not too sure whether they will come back, but valuation continues to pose very challenging questions to anybody who wants to invest in our market.
Okay, all right. Dilip, nothing wrong, right, in hoping. It's good. You know, they have been actually just selling lock, stock and barrel. So they come back to TK. If they don't come back, okay. It looks like at least our fundamentals are coming together with the rupee showing some strength. Brent crude price is cooling off. And I think there was a lot of pessimism that was getting built in, maybe with good reason. The times ahead could be rocky as well, but there'll be a few stocks that you could bet on. That said, Dilip, it's been a while since we chatted. So give us a couple of ideas. MTAR is something we just spoke about. Yesterday, the stock was down 9 to 10%. Today, the management came in here on CNBC TV18, and you heard the clarification. They said they have a good runway. Valuations is still demanding. But would you get into the stock, or do you have an alternate stock? Maybe from the same vertical, or maybe another one?
So, Nigel, as far as MTAR is concerned, I think all the things are extremely positive for them. And most importantly, for a stock like this, which is trading at more than 100p, the order inflows is what will really keep the stock on the radar and will define as to how long this momentum is going to continue. Because without any doubt, I think the room for error and the margin of safety has become certainly very small. But I would say that yes, MTAR has been delivering pretty well, and they are making all the right kind of noises, whether it's data center, space, whatever you name it. In all the exotic spaces, they are there, and they are getting the kind of valuation, which is what we have seen has happened even with Hitachi Energy, whether it is Siemens Energy, whether it is Schneider, whether it is Vernova. I think all of them have really built their the entire momentum around this data center kind of a story. So, we have not really played MTAR, but we have more or less played the entire basket of the other stocks which I just mentioned. So I think, yes, MTAR will continue to be a part of that basket, which continues to do pretty well, and where the interest will continue to be good. At least, if you have to talk about the free cash flow, you have to talk about the ROEs and the order inflow. I think all these companies will fit in very well. For some more time to come, how long, I'm not too sure, but at least for either 6 months to 1 year, yes.
The stock has almost tripled in value, right, before this correction came from the record high levels. Dilip, stay on. Get you more opinion from you on a lot of the other stocks that are moving around. The other bigger move has come in crude. Oil prices down almost 5%. Brent now well below 90, trading around 86 and a half as we speak. And how have all of these oil sensitives reacted to these developments? Sudarshan is here with all of that data. Sudarshan.
So what a move we are seeing in the market. We are not sure if the deal between US and Iran will happen, but what it has done is the reports of the MOU between US and Iran have triggered a sharp uptick in the market, and at the same time sharp downtick in the crude, which is very positive for us or markets like India. And now if you take a look, just ahead of the war on 27th of February, crude was hovering around $70 per barrel, and from that level it had gone to as high as 126 by the mid-April. So that was almost 85% uptick. Now from that level we are down to $86 per barrel, down more than 30%. Now that is positive for some of these sectors. First one is oil marketing companies of IOC, BPCL and HPCL. Also, it's positive for aviation companies like Indigo and SpiceJet, and positive for paint companies like Asian Paints, Berger, Pidilite. So first talking about oil marketing companies. So if there is a fall of $1 in the crude, it improves EBITDA for these three names in the range of rupees 200 to 300 crore. For paint companies, up to 50% of their input costs are linked to crude. That's the reason you are seeing a big gain or big uptick in the names like Asian Paints, Pidilite or even Berger Paints. For aviation companies, Indigo is amongst top Nifty gainers today, and the reason is ATF forms almost 40 to 50% of the total operating cost of the aviation companies. That's the reason you are seeing an uptick in all the names, whether you take it OMCs or aviation companies or even paint companies.
Okay, all right, Sud. But as I told you earlier, today investors say they want more. Sudarshan's been crunching the data, reading brokerage reports as well. So you're also tracking the auto space, right? That has a bit of a positive impact on commercial vehicle makers as well as financiers. Run us through that piece.
So I'll just give you one example. Ashok Leyland. Till Q3 earnings were very strong. Even Q4 earnings were very strong. Just 2 months ago, the share price of Ashok Leyland was more than rupees 200 per share. Now today, even after 8% or 9% uptick, the share price is around 150 rupees per share. And the main reason of the sharp downtick that we had seen in the share price because of sharp increase in the crude price, and that had led to the concerns related to demand and the margin. Today we are seeing a sharp uptick because there's a sharp fall in the crude price. As I've told you, Brent is now hovering around $86 per barrel. So what it does? First, it improves the freight demand because lower diesel prices reduce the operating cost for truckers, and that's the reason it's positive. And also, this improves the demand for MNHCV and LCV. It happens with a lag of 1 to 2 quarters, but I can tell you that if the fall in the crude sustains, analysts or investors will discount the earnings concerns for these companies even for 1 to 2 quarters. But for that, crude fall has to sustain. Second, fleet utilization improved because lower fuel costs improve the total overall economics of freight. And third is the historical data suggests that if there is a fall in the crude, it also weighs on the input cost. Input costs also come down, and that will have a positive impact on the margin. Now coming to the CV financial. So operating cash flows see an improvement because diesel forms almost 35 to 50% of total operating expenses of majority of the truckers. Second, financing demand improves as the utilization improves, and also fleet expansion and replacement cycles strengthened because of the sharp fall in crude. And that's the reason you can take a look at Chola Investment, Shriram Finance. All these names are sharply higher, along with Ashok Leyland or say even Force Motors.
Well, what a move on Ashok Leyland, 9.5% higher now for the stock. And look at Shriram Finance as well, among the top gainers on the Nifty today. And the CV companies, the CV manufacturers are on a tear now. Look at Tata Motors CV as well. That too is now trading with gains of around 8.5%. So good going for a lot of these names. Of course, Ashok Leyland still around 30% off its 52-week highs of around 200 plus levels. 215 was that 52-week high that the stock had seen. So there's some recovery from lower levels. By the way, just before we get back to Dilip, just look at the currency as well. Exactly at 95 now. That's a 2% appreciation from the lows that we saw. It's now 94.95, so it has appreciated past the 95 mark as well. So from the lows of 96.96, it's an exact 2 rupee appreciation that the currency has seen from lower levels.
And Hormuz is booking some tickets, I can see. Hormuz is flying abroad. He's saying the currency has moved in favor. You know, ATF prices are going to cool off. I can see he's sending a mail for leave. Good on you, Hormuz.
Dilip, well, a lot of these things that are, you just heard Sudarshan, right, from all the crude sensitives. From the auto space, the commercial vehicle companies, Ashok Leyland, do you like it, considering the fact that it has come off significantly from its highs? And if not, what are the other preferences that you have within the commercial vehicle space and even the CV financiers as well, the Shriram Finances and the likes?
So I think the knee-jerk reaction as what we are seeing right now is certainly in favor of this auto space and more so in the favor of the CVs. And certainly, if you, as what you very rightly said, after touching about 205, 210, if it is available around 151, 153 even now, I think it looks very reasonable for either 10 to 15% rise so that the momentum, if the momentum is maintained, which is what we can expect. The question right now is, one is we have seen on a short term, on a knee-jerk basis. But on a macro basis, how does the picture look like? But what we understand from the channel check that we had done and from the sources that we understand that the market continues to be very challenging, whether it is for CVs, whether it is for PVs. So I think overall the situation remains pretty much challenging for them. They have to really push it very hard, and I think we are back to those days of discounts. So, you know, initially you had that push of GST being given by the Modi government, which was fantastic, which gave that multiplier impact. Now, once again, they require some kind of further push if this momentum of this falling oil price has to be maintained. But on a macro basis, the headwinds continue to remain pretty strong on an overall basis, and that possibly may not go away in a hurry.
All right. Well, I think, Dilip, the good news continues to trickle in. We're getting some source-based information from Bloomberg, actually. It's on the wires, that a G7 official is saying that the US-Iran MOU could be signed as soon as Sunday. Well, Mr. Trump wants to party, looks like. You know, finally some good news coming. There's some kind of rational behavior as well coming there. Logical that we see an end to this war that's been just getting prolonged over the last few days. And the markets like it. Forget about, 23,400, 23,500. We're on the verge of going to around 20,600. And in the last few minutes, what's taken place is the big boys have said, our time has come. Reliance Industries has underperformed over the last 1 month or so. Just take a look at that one. That's come in there. It's playing a good innings right now. It's perked up to the high point of the day. So Reliance Industries comes up for you on the screen. And you have HDFC Bank as well. That's the other big name in there. When these two big names move up, it takes the market with it. It supports the Nifty Bank, supports the Nifty as well. And I think L&T is the other one as well that's doing quite well. Remember, that one got hit because of the exposure it has to the Middle East. That dip has got bought into. The stock is up close to 4.5% now. And that's a larger weight as well. So explains why the market is now moving up. Hormuz, good times. Last 40 minutes to go. And it seems we have some fireworks on the cards.
Oh yes, and they are. 23,630 was the level that Mitesh spoke about just a few minutes ago. So good going for the index at 23,600 now, and that's what we were hoping for, right? For the index heavyweights to put their hand up. The Reliance, HDFC Bank, all of them playing their part now. Just pull up the Nifty IT as well, just to see whether that has seen any recovery, because that was on a 7-day losing streak, and that was also keeping a lid on where the Nifty was. Nothing on Nifty IT. Still down around 0.3%.
Not yet. Not yet participating.
Not yet. Yes, eighth day of losses now, at least for now, for the Nifty IT. Dilip, anything that you would want to recommend? Anything that you are putting money to work with right now in a market that is now showing signs of recovery?
Dilip, give us some exciting idea. You know, you normally come up with something exciting. So give us one of those broader market stocks that investors who are watching the channel right now, they say that Dilip has given us this idea for the next 2 to 3 years and it looks good. Go ahead.
So, Nigel, it's not so easy, because I think what has really happened is the mid caps have really done pretty well, whereas the front lines have really taken a back seat. So in this particular scenario, the mid caps have really done exceedingly well. And if you ask me, as what I said, a lot of the stories that we have played around this data centers and the energy related, it has been played out very well, and we have participated in that, but they still continue to look good. But now if you ask me something very specific, I would say that stocks like Orchid, stocks like Natco Pharma, I think stocks like Venus Remedies, some of these stocks hold a very good promise, because they themselves have come out with some very innovative drugs following what Wokhard has done. So I would say that some of these mid-cap pharmaceuticals is likely to show a very good positive surprise. So on a longer term basis, I think some of these stocks will continue to look pretty solid. So some of the mid-cap pharma names look pretty interesting for us from this point of view.
Mid-cap pharma, of course, Natco Pharma was one name that Dilip mentioned. That too was a stock that was smashed after its results from levels of around 1,300 to sub 800, is now seeing a recovery as well, 2.5% higher today on Natco Pharma. Dilip, pleasure having you as always. Thank you for sparing time and joining us this Friday afternoon in what is turning out to be a very, very good session for the markets. Take a short break. On the other side, Kotak Mahindra AMC's Shibani Sarkar Kurian joins in as our alpha manager for the day.
Welcome back. Markets have scaled up even more. 23,600 is here for the taking. So all the week's disappointments are getting erased in a single trading session. On a day-to-day basis, we were getting used to ending closer to the lower end of the range. Well, today it's likely to be at the upper end. At least that's what we hope. But Hormuz has popped out of his chair. He's gone across to the wall to tell us about the stocks that are moving around. Hormuz, take it away.
Possibly everything moving around right now as the kind of day that we have had the last 60 minutes. But of course, there are certain names that have made headlines. IFCI is one such name. It's a 20% upper circuit for the stock. It's the biggest single day gain that the stock has had in the last 5 months now. Snapped a 2-day losing streak. But take a look at the volumes here. 26 crore shares have been traded on IFCI today. The 20-day average is 5 crore shares. And 20% of those are marked for delivery as well. So even after the proportion of trading volumes is significantly high, the delivery volumes are fairly okay. The stock continues to remain above its key moving averages. It's been 2 months now since that has happened. It's continuing to move higher as well, 60% higher so far in the year of 2026. And among the most traded Nifty 500 names, along with the HDFC banks and the Aegis Logistics and the likes. Ashok Leyland, we just heard from Sudarshan why the stock is doing well in today's session. It's a 10% circuit now for Ashok Leyland. And the biggest, of course, the stock was down in 3 out of the 4 prior sessions going into today. The volumes would have, of course, improved now almost to the second highest in the month of June so far. Well over 4 crore shares traded on Ashok Leyland, more than twice its 20-day average. Although the stock still remains below its key moving averages, the 50 DMA on the upside comes in at 159.5 and the 200 DMA comes at 163. So these are the 2 levels on the upside you need to watch for Ashok Leyland. 40% of the total shares traded so far are marked for delivery, and still the stock though is down around 30% from its 52-week high levels, which was around 215. And of course, the fall in crude oil prices, ONGC, Oil India not having a good reaction to that, and HPCL now is moving to the day's high, 6% higher. Of course, all the other OMCs would have also done well for themselves in today's session, but look at the volumes as well. ONGC and Oil India continue to fall on high volumes. HPCL has had over 1 crore shares that traded so far, twice its 20-day average, and almost 55% of the shares traded on ONGC are marked for delivery today, almost 50% for HPCL, and Oil India too is seeing some delivery volumes in today's fall.
Okay, all right, Hormuz, come back to your seat and let's get straight to a chat with Shibani Sircar-Kurian, the head of equity research, who joins us on the show. Hi, Shibani. Good afternoon. Good to see you win. Well, a far better day to join in, right, Shibani? I mean, markets have moved up. At least there's a temporary bit of relief rally, because otherwise, there was a lot of pessimism getting into the system. Your view now, some of those headwinds are getting ironed out. Whether you look at the rupee move, crude oil prices as well, valuations seem like a bit of a sticky issue if earnings don't come about. Your take.
Hi, Nigel. Good afternoon to you. So you're right. The market is clearly centered around what's happening in the Middle East, and that is driving the mood of the market. And we await the final contours if and when the deal does happen. So that's keeping that aside. So the way we are approaching the market today is a little bit more stock specific and bottom up in nature. So if you look at the quarter gone by, while at the headline level, your Nifty earnings is showing muted in terms of single digit earnings growth at about 4%. But when you look at the broader market, especially when you look at the mid cap space, or even if you look at NSE 500, for instance, earnings growth has been holding up far better. So NSE 500 has delivered double-digit earnings growth, and mid-cap earnings have been in excess of 20% on a YOY basis. Therefore, in this construct, and as you were rightly alluding, valuations are reasonable. So the Nifty today is trading slightly below 19 times, which is again slightly below its long-term average multiples. So in this construct, our approach to the market has been fairly stock-specific in nature. We have been more focused in terms of companies which derive demand from domestic sources, trying to identify companies where earnings trajectory holds up better over the next 2 years, and of course, where valuations are reasonable. In terms of market capitalization and that construct, our view has been to be overweight as far as large caps and mid caps are concerned, and that view continues at this point in time.
Shibani, good afternoon. Thank you for joining in. I don't know how much of a cricket follower you are, but for Nigel and I who watch the game, every time on a tough wicket when a batsman does well, you say he's batting on a completely different pitch. Right now, IT index is batting on a completely different pitch, unfortunately in a negative connotation. With everything that's reacting to what is happening right now, the IT index has gone nowhere. You mentioned about the fact that the domestic, you are focusing on the domestic oriented themes and on the valuations as well. IT matches the valuation front, but not so quite on the domestic. What's your stance here?
Yeah, so it's a tough and a tricky one. If you look at the sector, while you're rightly suggesting valuations have clearly corrected over the last, say, 6 months to a year period. However, when you look at the sector, the key driver for the sector remains growth and specifically revenue growth. Now, in that context, there have been two key issues and two key points of arguments as far as the sector is concerned. One, we are seeing that the overall macro framework being uncertain has meant slowdown in terms of discretionary tech spends, and that is impacting the top line growth across companies. The management commentary, even in the quarter gone by, does not seem to suggest a significant pickup in Q1. And remember, Q1 and Q2 are typically seasonally strong quarters for the sector, and therefore growth remaining muted is a headwind. The second is, of course, a lot of the debate that's happening around the AI front. Here, we believe that AI does present an opportunity for the sector in terms of volume growth, though pricing is clearly a pressure point because there is this entire focus of clients in asking for productivity pass-throughs, which is impacting the overall pricing scenario. And that's reflected in margins, where margins are stable to slightly lower despite the currency depreciation. So our view on IT, despite the correction that we have seen, has been somewhat cautious. Across our portfolios, we have been neutral to slightly underweight on that sector until we get to see stability from a global macro perspective, which leads to improvement in terms of demand and therefore growth. We will possibly be similarly placed as far as the sector is concerned.
Okay, all right, Shibani. Appreciate you joining in and giving us your quick take. Have a good remainder of the day, a good weekend as well, and we catch up rather soon.
Thank you so much.
Well, as we're having the chat with Shibani, well, the markets have said not stopping today. It's moved up even more. Now we're on the verge of going to 23,630 odd. It's taken a leg up. Well, let's hop across to Nimesh, who's joining in on D Street Chatter. Well, Nimesh, the stars are aligning gradually, not out of the woods, but a very, very good trading session. And when you have a net short market, well, that's music to the ears of the bulls. What are you picking up?
And one of the strongest single-day gains in many, many weeks for the markets now, largely on the back of the reports that suggest that there is enough in terms of draft and MOU between Iran and US. So that's actually the reason why we're seeing a very sharp rally in the markets. Of course, led by the financials, and that's been the consistent feedback as well, right? That it's a financial sector where there is a bit of buying as well from large institutions, especially the private banks are well bid for the last many days. And even in today's day, there is very strong buying in large private bank names like HDFC Bank and ICICI. So clearly, that the financial is a space, and within that, the private bank stands out for the last many days, and so is the case today as well. Overall, the flows are quite mixed, is my sense is. There is a bit of selling into some momentum names as well, but largely it's a mixed day as far as flows are concerned. Technically, 26,500, 600 is a level to watch. If we decisively close above those levels, you'll probably see further short covering rally in the days to come. So that's overall feedback. But largely, I guess the focus and the interest seems to be clearly towards the financial names in the last couple of days.
Definitely looking to close above that 23,500 mark, Nimesh. But the bigger interest is the stocks that are on your radar. Most of those news breaks are part of our. We look forward to writing about them. What's on the list today?
So the first stock on my list is JSW Infra. That's been buzzing in trade today, up 6%, large volumes. Looks like some bit of HNI interest is back. And also there is the strong indication that maybe the company is very close to raising funds via QIP. So it can happen next week. So that's something to track in JSW Infra. The second stock is Heritage Foods. Been trading in a very narrow range of late, but expect a large block deal in Heritage Foods very soon. So for a change, this is not a promoter block. It's mostly one of the institutional holder who could be a potential seller in that block. So watch out for large block in Heritage Foods. The third name is Oberoi Realty. A very small buy flow from larger FIs. Looks like some bit of interest is back after the big underperformance in the real estate names. And also interestingly, Morgan Stanley has put out a tactical buy on Oberoi Realty with an up move in the next 30 to 60 days. So that's the reason why a bit of move in that name. And the last is Karur Vysya Bank and IndusInd Bank. it stands out and it's part of my list largely because, while there is so much of momentum in the banking names, these are the two stocks where there is selling pressure from larger institutions in today's market. So the delivery volumes could be high, but on the sell side in both these names.
Got it. Okay, all right. Nimesh, thanks a lot for that. Well, the screen is looking good. When we started off the show, we were celebrating around 23,550. We're almost 100 points higher from the start of the show. And the one that's going all hammer and tongs is, in fact, the Nifty Bank. That's now on the verge of hitting that 57,000 odd mark. A good-looking screen, Hormuz, but we have to take a short break. Come back. We'll get you some trading calls as well. Some buy recommendations, probably, with our technical expert.
Back, trying to hold on to that 23,600 mark now, 450 points higher on the index. Great recovery that we have seen over the course of the day. Mitesh Thakkar is back with us to tell you more about the index and, of course, what to buy or sell today for a reverse trade on Monday. Mitesh, you spoke about 23,630. We got there. 23,635 was the high that we made. Now, where does the index go from here? And, of course, your BTST trades.
So I think, on the index, it is the Bank Nifty also is now hit, nearly hit 56,900, 57,000, which is my target. We got a high of around 56,867. But what is interesting is that a lot of banking names are turning on the upside, especially, the private sector banks which are lagging, Axis Bank, ICICI Bank, HDFC Bank, Indus Bank, etc. I think are turning on the upside. So I think once you get past and start closing above 57,000, you should see more strength into the Bank Nifty and therefore in the Nifty as well. And on the stock side, Gas Authority is a BTST. Keep a stop at about 168. Look for targets of 173, 174. And GMR Airport, I think that's a BTST with a stop bid of 102 half for targets of 105 half.
All right, Mitesh, thank you for joining us with your stock recommendations and on your views on the index as well. Hope you have a good weekend. Well, the sources now say that the board of directors at HDFC Bank are likely to appoint a new chairperson in the first half of July, with 5 people currently in the shortlist. Let's go across to Furqan for more on this. Furqan.
So what we learn is that the HDFC Bank's board would be appointing its new chairman by the first fortnight of July 2026. Sources tell CNBC TV 18 that the bank's nomination and the remuneration committee has already shortlisted 5 different people for the coveted role. Among the people shortlisted are a former deputy governor of a Reserve Bank of India who has recently retired, a former public sector bank chief, a former chief of multinational company in India, a former bureaucrat, and a tech veteran. What we also learn is that the NRC of the bank would all these 5 people individually and zeroing in on 2 of them, which would be forwarded to the board of the bank. And the board of the bank would in turn select one of them as the next chairman of the bank. The appointment of a new chairman at HDFC Bank was necessitated after its former chairman, Atanu Chakraborty, abruptly resigned in March of 2026, citing ethical concerns. As a stopgap measure, the bank had appointed financial services veteran K.K. Mistry as its interim chairman. K.K. Mistry's 3 months term is coming to an end on June 18 this month and is set to get a reappointment till the new chairman comes on board. What we also learn is that the bank is moving to reappoint its CEO Shashidhar Jagdishan along with the appointment of the new chairman in the first fortnight of July 2026. Now, it's important to understand that the Jagdishan's reappointment is subject to the clean chit given by the law firms, and the report of which is still awaited and has been delayed. Now, what we learn is that the report from the law firms is expected by the end of this month. We reached out to the HDFC Bank for the comments on the story, and their comments are still awaited. Back to you.
Okay, thanks a lot for that. Quick update coming in there. HDFC Bank, as we speak, at the high point of the day. But it's going to be a big global event today because Wall Street is getting ready for the biggest listing in capital markets history, with Elon Musk SpaceX set to debut on the Nasdaq later tonight. Harmaz has gone across to the big wall to tell us about all those details. Harmaz, what a big moment it's going to be later this evening.
An absolutely big moment indeed for the capital markets across the globe. SpaceX is set to take flight on the Nasdaq today. SPCX will now become a publicly listed company later in the day. We've already spoken about that big $75 billion IPO, the $1.7 trillion market cap, which will make the company the 7th highest or the 7th biggest US company at that market cap by default in just the first day of listing. But the biggest story today is about patience, conviction, and of course an early entry that gives you a bigger exit. You take look at all of these names that we are going to talk about were early backers of SpaceX, and they are going to sit on a big bounty after it becomes a public company today. The first one is Ron Barron. He entered in for 2017 when SpaceX was valued at $22 billion. His stake is now valued at $12 billion, and SpaceX is now a third of the Barron Partners Fund and 23% of the Barron Assets Fund. Of course, we are valuing that at the IPO price of $135. Founders Fund by Peter Thiel, they were the first backers in 2008. They invested around $600 million across multiple rounds. That current stake is now over $50 billion, and that stake is 62,000% returns on that early capital investment. The next one, Alphabet, Google's parent, they have an investment in SpaceX as well. It is known as Alphabet's hidden asset because they were a part of that $900 million investment they made in the Series F round back in 2015. That $900 million is now worth $106 billion, and that's almost 1 to 2% of Alphabet's overall market cap as well. Fidelity Investments are also going to be sitting on a big bounty. They were also part of that same Series F round back in 2015. They also led a Series I round in 2020, and they now have a significant significant SpaceX exposure as well. Around 5% of the Contra fund, 3.5% of the blue chip fund, and 2.5% of the growth company fund. All of these funds have assets under management of anywhere between $100 billion to as high as $300 billion. Anderson Horowitz also led a $750 million Series J round in January of 2023 when SpaceX was valued at $130 billion. And in 3 years, that investment has yielded them a 12x return. And that's the kind of returns that you have seen. Cathy Wood, of course, her ARK investment, known for controversial investment decisions as well. They were the first investments in SpaceX in late of 2023. Now SpaceX is the largest holding in the ARK Venture Fund, which is at 17.2% of the total AUM. And since their entry, the valuations of SpaceX have gone up by 730%. Look at the Ontario Teachers Pension Plan. They invested around $200 million in 2019. That stake is now valued at $11.5 billion. So that's the kind of bounty they are going to be sitting on. And the Washington University, who invested a decade ago around about $50 million, and that's now 10% of the total endowment of around $17 billion as well, the largest for any university. The analysts have already started to bet on SpaceX. Oppenheimer initiated coverage with an outperform rating, a 12 to 18-month target of 190, saying that the diversified portfolio makes it an attractive bet for investors. And the other coverage is also coming from New Street Research, a target of $165, valuing XAI as a $575 billion business. But the real winner here is Elon Musk. He's going to become the first trillionaire on the planet. The SpaceX stake plus the Tesla stake is going to make him the first trillionaire. And of course, he controls almost 82% of the voting power at SpaceX, almost controls the entire board. So a big day for capital markets in general. SpaceX becomes a public company tonight at that near $2 billion valuations. There are plenty of winners that emerge from this.
And I'll tell you what, you need to log on to our website later this evening because Hormuz will be crunching all that data, putting up some interesting pieces as well. So make sure you log in to our CNBC TV 18 website as well. The digital platform will be getting all the interesting data points on that front. I think we have some news at the bottom of your screen. I'm not able to have a look at that. The CBI has filed 2 charge sheets in the IDFC first case relating to that Haryana government. So that's the ongoing issue that was there. Anand Tandon, market expert, joins us on the show. Hi, Anand. It's a rather good trading session, but how are you feeling about the Indian markets? I've been fairly cautious, and rightly so, over the last couple of years. Are you getting a little bit constructive? Could you share a couple of ideas?
Well, clearly, if the deal gets signed, which is what everybody is anticipating, you will see a pop in the market. So a 5 to 10% rally in the index would not be unexpected. The challenge is what after that, because that will again put the market back in the range of overvaluation. But for now, who wants to look a gift horse in the mouth? So you just ride the rally and hope that the forecast that we will have a signed deal by Sunday hopefully come true.
Seeing the red and sideways movements on the screen, we'll take some green after all. Anand, good afternoon. Thank you for joining in. Well, the crude sensitives have been all in the talking points over the last 3 months now. At one point, ONGC and Oil India were the big talking point when oil went up to 120, 125. Now oil is back at 85. Is the best over for ONGC, Oil India, or is the dividend yield an attractive enough investment bet to put ONGC in your portfolio?
These are managed balance sheets, right? This is something I've always maintained, that these are to be thought of as special purpose vehicles where the government decides how much of the profit is to be shared by minority shareholders, and the rest of them they will keep. Now they can keep it in the form of taxes, excise, tax on the crude, or just dividends, or what have you, or special tax because of the kind of event that it has witnessed. So there is no way to forecast it. You really want to play crude, etc. You should either play the raw material directly in the commodities market or go overseas and invest. Is ONGC a good bet? Well, at a certain price, everything is a good bet in the hope that nobody's going to kill the golden goose. So there is a standard amount of money that ONGC will be allowed to make. There is no major problem, when the price goes up, it's capped at a certain level. When the price goes down, the capping doesn't matter. So, you should assume that it is going to be always getting money at the rate of around $60 to $70 per barrel equivalent, and base yourself accordingly.
Anand, stay on. There is a lot more to talk to you about. Take a short break. Back with more on the other side. Stay tuned.
Welcome back. My colleague Hormuz, he was just talking about the IT pack actually not participating. I think some of them, they haven't taken that comment too well. You have Wipro that's moved to the high point of the day. TCS as well has perked up. I think we should get the IT index. It's more or less flattish. Remember, it was down close to 100%. So I think we should get some of these stocks up for you. And I think Infosys as well should come up for you on the screen. So some of these tech names are clawing their way back in trade. Anand, interested or not? These are companies I've tracked for very long. I'm not sure whether post the correction you're interested. Imagine we're 6 months into the year and the index is down 27%.
Yeah, so I mean, from a point of view that it has grossly underperformed, you may get some performance. But the basic business case still remains a question mark, right? Until that is not corrected, I don't see the sector as an outperformer. It may catch up a bit given the fact that right now the mood is on the upside. And therefore, everything, as they say, the rising tide will lift all boats. But this boat by itself has sprung a large leak.
Among the financiers, Anand, they are finally starting to put their hand up after weeks of underperforming. The private banks, the large ones in particular, the larger private names, PSU banks or the larger NBFCs, where does your interest lie?
I think the larger private banks are the no-brainer because, they have been a strong underperformer by and large. And there is nothing wrong with them actually, especially the big ones. So by and large, I would think that's the simplest pick. You don't need to do too much of cherry picking in this sector. It has largely not performed.
What about the chemicals pack? Anything you like? Something that's come on the radar, Sudarshan Chemicals. The numbers look quite good. The management commentary as well is good. But the street is, questioning the execution, I think so, because they've gone ahead and they've bought a big overseas firm. And if it clicks, then it puts them in the other league. But there's always some skepticism when you go ahead and do that sort of an acquisition. Sudarshan Chemicals has now perked up a little bit, but it's down 15% in the last 10 sessions. Your view on this name or any of the other chemical names?
So I don't particularly track this one. Unfortunately, the problem with specialty chemicals is that each one has a different portfolio. So it's a little difficult to actually track all of them. My personal favorite always has been fluorine-based chemicals because that is something that has a strong entry barrier. Not everybody can do it. And they have done generally quite well over the years. But on an overall basis, I think there has been a significant underperformance in this sector over the last 2-3 years. There hasn't been much to talk about. So maybe it is time for this sector to look back up. Most of the ducks are in line. So there is no particular reason why this one should not do well.
It's a pretty forgettable year before last and the last one as well for a lot of these chemical companies. Anand, the quick commerce space is now heating up. Zepto has now filed its papers as well for the IPO. We will now have possibly 3 public companies within this space. Among the 2 listed ones as of now, is it becoming very clear that one is zeroing in, doubling down on the quick commerce space and the other one is just taking its time and trying to focus on getting things back on track before it goes into further expansion mode? Do you have any preferences within this quick commerce space among the 2?
Purely depends on the money available, right? If money continues to come in, you will find more and more players coming in. Don't forget there is an Amazon as well, which is also flirting at the edges in terms of trying to get into the same space. So therefore, and they have deep pockets. So, we still, I think there's still some time before you can hand out the winner trophy to the leader. But that said, their execution has been quite good. And therefore, if you have to choose between something which has at least demonstrated strong execution versus someone who's still trying in the process, it's easier to always bet with the guy who's already shown that they can win.
Okay, all right. Thanks a lot, Anand, for joining in. I think you're sounding a little bit more optimistic than in the last few months. So that's good, Anand. Hopefully the tide turns.
Good weekend.
There will continue to remain challenges, but the weekend has to be good. Thanks for joining in. Well, time to wind down the markets. It's a rather good trading session from the bullish perspective. The stars seem to be aligning. The final tick is almost at the high point of the day, and the Nifty Bank was the one that really led the way in today's trading session. The Nifty Bank did well. The financiers as well were up and about in today's trading session. Shriram Finance, Bajaj Finance, the top gainers on the Nifty. The big boy L&T that got hammered, when this entire conflict broke out. Well, that one as well was up close to around 5%. And you had stocks like Interglobe Aviation that were up close to 5%. Remember, those were stocks that got hit when crude oil prices spiked. Now you had the OMCs, you had Interglobe Aviation, as well as Asian Paints that did pretty well in trade today.
Well, unsurprisingly, the top 3 gainers on the Nifty today have been the private sector financial names. Actually, for the week, Kotak Bank up 7% for the week, Axis Bank up 6%, ICICI Bank has been the one standout performer this week, 6% higher for that one as well. All of them are putting their hand up and ensuring that the Nifty has closed at the highs of the day. You take a look at some of the broader market names as well that have done well today. Ashok Leyland stands out among the Nifty 500 names today. The 10% up move that we have seen on the stock today among the top gainers on the Nifty 500. IFCI ends at a 20% upper circuit as well. Aegis Wopac has had a good week. In fact, it has turned out to be the top gainer on the Nifty 500 for the week has Aegis Wopac. Even in today's session, the stock ending 9% higher, and a lot of the other beaten down names as well. Inox Wind ending with gains of around 8.5%, Data Pattern 7.5%, JK Tyre putting in a 7.5% up move as well. So a great day for the markets, reversing everything that they had lost for the week. We end the week with gains. The Nifty Bank has been the outperformer, and the broader markets too have done very well for themselves. We take a leave on this edition of Closing Bell from Nigel and me. Thank you for watching. On the other side, Editors Roundtable.
Well, global markets rally on hopes of a deal between Iran as well as the United States. Easing crude oil prices and a stable rupee and expectations of lower FI outflows have helped the Wall Street snap the two-week losing streak. Banking stocks, they led the charge. The Nifty Bank posting its best weekly gain in last 2 months. Mid-caps, however, underperformed while IT stocks emerged as the biggest drags on the market. Hello and welcome to this special edition of Markets Forward. I'm Nigel D'Souza and with me is Nimesh Shah. Well, Nimesh, what a week. I mean, what an end to the week.
What an end to the week. I think it was all about Friday today. Normally a Friday factor plays on the downside. Today for a change, it played on the upside. And what a big move, right? I mean, the Nifty was up 450 points. Bank Nifty saw a big rally. And, you know, at least from a market point of view, this was a chatter for the last few days. And I've been consistently saying that there is buying in the financial names, especially the private bank stocks. And look at the kind of move you've seen in the private bank names today. So,
absolutely.
Absolute pleasure to see, this kind of a rally. But again, it's all hope that there is a final settlement to this 100-day plus war. But anything can change in few hours, Nigel.
Well, that's right. And over the next 30 minutes, we'll decode the week that's gone by on the Wall Street. We'll take a look at the big Vedanta demerger story as well, as we'll have 5 listed entities from the Vedanta group from Monday itself. We'll also analyze what's driving the strong rally in the banking names. Joining us on the show is Nimesh Chandan, the CIO at Bajaj Finserv AMC, who joins us on the show. Hi, Nimesh. Good to have you on the show, and it's a good day as well, right? I mean, after a while, you had a good Friday feel factor. You started off the day with some hope, but ending at the high point of the day was definitely heartening. Not out of the woods, but how would you see participation in the Indian markets right now? And how would you feel post the cooling in crude oil prices and stability in the rupee?
Indeed, it's a nice close to the week. It's a fantastic Friday. And clearly, if you see oil prices in the last, especially 2 weeks or so, with bad news, they were not going up much. And with good news, they were correcting quite significantly. So the market, in a way, was preparing for a kind of a peace agreement or moving towards that peace agreement soon. And I think that's what they got today. So investors, I think, cheered that. What this does is it now brings focus back to fundamentals, back to mega trends, back to where growth and valuation gaps are. So very refreshing. And there are so many opportunities in the market, even after this rise that we saw today. Valuations in many sectors, many stocks are attractive. So I think once we get some conclusive evidence over the weekend, hopefully, we will see this rally continue now.
Nimesh, you spoke about opportunities across the board in a lot of sectors and all. If I were to ask you, identify three sectors for us which are going to be top bets. If indeed there is a settlement with regards to the US-Iran deal, what would be the top 3 bets in terms of sector specific from here on?
So Nimesh, actually, we like everything except IT for now. So we are bullish on the economy and cyclicals. So financials, industrials and materials we are bullish on. On long-term structural trends, we are positive on pharmaceuticals, healthcare, consumer discretionary, a lot of digital commerce companies. So actually, there's a lot to play. In fact, when we were having a meeting within the team today, we were discussing now, rather than eliminating those companies where we see some downside, we need to eliminate those companies where we see only modest upside. So actually, there is a lot to play. Financials will probably lead this rally because they have a higher weightage in the index. And even if passive flows come, you will see a good bump up in financials. And valuations are attractive and there's a lot to choose from in financials. So private banks, NBFCs, I think should lead the market as a sector.
I'll ask you more about metals and financials, Nimesh. But first, let me toss to Nigel. Nigel, the big event is on Monday. Out of one company, now it's going to be 5 companies within Vedanta Group. You highlighted and you explained very nicely last time as well when the demerger was happening. Now that the 4 companies are getting listed, take us through how should one value each of these businesses?
You know, Nimesh, this was announced on September 29, 2023. So it's been a long while in the works, but it's going to be absolutely worth it for those that played it because the stock price was 220 rupees and on the last day before the record date, it was at around 730, 740 rupees. So there was already a big move in the stock price, but now is where the real value is going to emerge because you'll have 4 listed entities coming in from the Vedanta group on Monday, that's June 15th. The 4 entities should come up for you on the screen. There'll be a separate aluminium vertical, iron and steel, oil and gas, as well as the power vertical. Remember just a couple of technical factors. There'll be a special session between 9 to around 10, 9:45 will get off the cutoff price. And from 10 a.m. onwards, there'll be listing of these 4 entities that will be on the bourses itself. Remember, it'll be under the T2T category, which will be trade to trade. That's a restricted category. For 10 days, it'll be in that 5% price band as well. So those are the technical factors. What are the reasons? Well, the management said they want to simplify the structure. Investors that wanted just one vertical, they can play the vertical of their choice. And as the management has said, that it's more tax efficient as well. Let's break it down for you. You'll see what are the target prices of brokerages. As you can see on the screen, we have put Kotak as we have put Nuvama as well. And bulk of the value and bulk of the reason of this particular demerger has been the aluminium business because that's bulk of, what was there in terms of an EBITDA contribution as well. And you'll be asking, why such a big focus on aluminium? Because they've done all the right things. They've put in the hard work with regard to that. There's going to be volume growth, there's backward integration, as well as, they're going to get the benefit of prices. So let's run you through all those 3 points. One is on the volume growth. Take a look at that. From around 2.4 million tons of aluminium capacity, they're going to be heading closer to around 3 million tons approximately. So that's one factor. The other factor is on the the backward integration, which is alumina. Alumina is going to be around 5 million tons. So they're getting the alumina, most of it from their own backyard. Not just that, if you look at the cost of production, I recall Vedanta, the cost of production was around $1,900 per ton. But in an environment which is inflationary, their cost of production has come down and they're saying it'll come down even more from here on because they'll be consuming a higher amount of bauxite as well as coal. Which is heartening to see because that's what will help profitability. And finally, aluminium prices are at around $3,500 per ton. Brokerage in their estimates, they're working around $3,000, $3,200 per ton. So that could give some kind of an upside risk as well. But talking about risk, Nimish, we know the group. In the past, it's always been a group not for the faint-hearted as well because the promoters sometimes do that intercorporate loans. There's a hike sometimes in terms of royalty rates. And there have been some pairing stake of the promoter entity as well. Though the management has said we are in far better shape. Vedanta Resources books have been, deleveraged to a large extent from close to $10 billion. It's down to around $5 billion odd. So they're saying they're in far better shape. So we don't need to do any of these measures right now. But it's a special situation. It's going to mark the new chapter for the Vedanta group. Let's see how that goes. But value unlocking is going to be important.
So Nigel, just to be very clear and simple for the viewers, 309 is the Vedanta, the listed entity right now. Yes. What numbers you showed, it'll add up to almost 600 rupees.
Right.
So effectively 900 is the price which you might get on day one versus the 730, 740 that was pre-demerger, right?
Right.
So effectively 25-30% is what investors are going to make on day one of the listing.
That's the hope, Nimesh, because 310 rupees approximately is the listed entity, as you said. Now, everyone will be gunning for aluminium business. Right. So there'll be fresh buying over there, but on the other few entities, there could be some selling because everyone wanted to play this. But ballpark, it'll be a 20-25% return in a manner of around 3 months for those that play this special situation.
Right. So, Nimesh, any view on Vedanta as a group, or are you looking as a fund house? Do you look at any of the special situation kind of stocks in your portfolio?
So I won't be able to specifically comment on this, but as per our disclosures, we do have a significant interest in Vedanta, and we have also been holding on to while they were getting demerged. And many a times we've seen that when such demergers happen, there is a value unlocking. Some of the assets that don't count much in the sum of parts start getting counted once they are individually listed. The ratings or the valuations are much more clearer. So they typically unlock value. And I think even in this case, from what the estimates you showed me on the screen right now, what I saw, it looks like when it got delisted, the sum of parts was about 700 or 750. And now with the kind of listing that people are expecting, it will definitely create more value. And if you see non-ferrous, like aluminium as a metal globally also has done extremely well. It's holding very, very firm, along with copper. And domestic steel prices are very strong, and companies are seeing good margins there. So, I mean, with the kind of numbers that are there, we expect a good listing.
Sure. Nimesh, the other big sector is the financials. You briefly spoke about financials as a theme which will do well. But, given the macro scenario, given the fact that if there is higher inflation, you might see a rate hike as well in the second half. In that context, what would be your preferences? Private banks, PSU banks, NBFCs or HFCs? Your take.
So few things have changed because of the kind of measures RBI has taken. A few things have changed because of, let's say, oil coming down. Maybe we'll have to recalculate our assumptions for rupee, the current account deficit, the BOP, and inflation now that things are getting resolved. So now probably you are getting into a phase where you are seeing good credit growth. Asset quality, thankfully, is not bad. It's holding up very well. It's very benign. And especially for banks, which were seeing some kind of NIM pressure when overall interest rates were going down, some of these banks will now seeing stabilizing in their NIMs or some expansion in their NIMs, depending on company to company. So not taking too bullish estimates also, on FY28 basis, and I think market will start pricing in FY28 estimates between September and December, so Q3 of this year. And that's where we see valuations very attractive in private banks, in some of the NBFCs. So there's a lot to play. And as I said, we have to actually work on which are the best upsides we can get. But private banks, definitely a little better than PSU banks for now.
Nimesh, what about gold? That was twinkling all around, and people are saying gold is the way to go, and gold will be the safe asset. In dollar terms, $5,500 per ounce has become $4,100 per ounce, telling you that every asset has its share of volatility, it has its share of risk as well, a bit of a wake-up call. But in terms of stocks that get impacted, the gold financiers have seen a sharp correction. Would you be interested in that space? Some of the jewelry stocks as well, there could be some mark-to-market inventory losses as well. So they as well have come in for correction. Anything you like in either of these two spaces?
Nigel, in so many assets, in so many times we've seen that, say, when gold is at 5,000, people estimate 6,000. When it is at 4,000, people start projecting 3,500 or so. These are typical cycles. Gold still has a play in a portfolio because there is central bank buying. There is a inflation hedge or some hedge against de-dollarization. So it's not that we will get a similar kind of strong rally, but it is definitely not like, end of gold as an asset class. People just become bearish when they see a sharp correction. In terms of the gold financiers or jewelry companies, we actually take a little more longer term view, apart from a quarterly fluctuation on inventory valuation, and many of them actually hedge their gold, what they buy. We actually look at a slightly longer term. On valuation, some of the gold financiers are still attractive in terms of, say, FY28 book values that we see. In terms of the gold jewelers, we actually saw a correction when gold prices were going high and there were some restrictions expected. I think we'll see more normalized growth from them going forward. So won't be able to say that we are too bullish on jewelers, but gold financiers, there is definitely some opportunities that we are looking at.
Nimesh, the other big sector where there is a lot of interest and momentum of late is the power stroke grid companies. Of late, we've seen so many brokerages initiating reports on the likes of Hitachi, Siemens, and all those names. And in general, I can see on Twitter as well, there's a lot of excitement towards these names. My question to you is, A, how do you approach this particular sector? The fact that, so many, most of these companies in that space are trading between 70, 80, 100 multiples. How should one approach this particular space from a valuation point of view?
Actually, we've been, as a house, bullish on the power sector since last 3 years, believe you me. And we have been holding these when they were about 1/5 or 1/4 the price that these companies are today. Clearly, valuations are very high. People are projecting 2030 and 2035 numbers and then pricing in those growth rates also today. So
is that a risk?
Are high.
Nimesh, is that a risk to your mind that people have started talking about 20, 30, 35 and adding those numbers. Is that a risk as a fund manager to you?
It is. So valuations are high, and that actually makes them a little vulnerable to any negative surprise that comes. Many of these businesses are project businesses, so it's not that they will have a smooth quarter-on-quarter kind of growth. One quarterly miss can really create more volatility there. So this is where now we are getting a bit cautious, mainly on valuation. But I'll also put a disclaimer that we get a little cautious a little earlier than the others. It's not that just because valuations are high, these stocks will correct or fall. They may actually even rally further.
Yeah.
But this is somewhere what we do is we keep them marked as something that we need to be very, very careful on as what we are trading and what we are pricing in. So valuations definitely in this have become quite high now.
Okay, all right. Well, Nimesh, the other irritant has been the rupee. So let's focus on that. The RBI's latest measures, they have helped to improve sentiment, support FI flows, or at least reduce the outflows and stabilize the rupee. Let's listen to what market experts make of these developments.
We are also expecting a good amount of inflows, at least $30 billion that we got last time. The only thing is $30 billion in 2013 were about 10% of foreign exchange reserves then, and $30 billion today would be about 5%. On top of that, the ECB scheme that the RBI has announced, that can also bring in another $5 to $10 billion.
And if India gets a weightage of about 0.7%, then, we can sort of think about $20 billion, a little north or south, that kind of money coming in. But my sense is this will mostly be inflows in the next year, not in this calendar year. But this will be very important inflows. And I want to sort of make this point that all the other money we are getting on FCNR, ECB, are money, that we have to repay very soon, in 3 years or so. But this money that we get through the bond index inclusion will be more sticky and more permanent in nature. And that is the kind of money we actually need, more sticky in nature. So that would be, I think, a very, very, very good news if and when it happens.
Okay, time to slip into a short break. On the other side, we'll continue our discussion with Nimesh. You stay tuned. Welcome back here, tuned in to Markets Forward, and we're in conversation with Nimesh Chandan. Nimesh, I wanted to ask you about some of these beaten down sectors. Crude oil prices, they spiked up, and a lot of these stocks, they got smacked, whether it was paints, tires, or even aviation stocks like IndiGlobe Aviation. Some of them very, very well-run companies and leaders in their market. Any of these sectors you look to get into, we could throw in there the OMCs as well.
Yeah, actually, we have been accumulating many of these cautiously when crude prices were high. See, there is a certain conservatism bias that everybody has, that when you see a spike in crude oil, you actually annualize that and say that the whole year will be like this, and you take the impact on rupee, current account deficit, and companies' P&Ls for the whole year. When they actually fall, we actually don't annualize that. We think, okay, this is a temporary kind of phenomena. Let's be cautious and let's take a slightly higher estimate than what the current prices are. So that conservatism bias is always there. And which is why we thought that people were overreacting earlier when these stocks were falling very sharply. and things would normalize in some time. Yeah, it would take some patience to hold them to see the trigger realize. But we have been positive on them, especially on the paint side. We have been positive, accumulating some of the companies which have been able to take price hikes, able to hold on to their market share or increase market share during this time. See, one of the other things that one should keep in mind is when there is a sharp rise in raw material cost or cost of production, many a times you see a significant shift from unorganized sector to the organized sector because the price differences go down. Even the supply from the organized sector is more consistent compared to the unorganized. So we look at what moats these companies have and then evaluate them. But this was definitely a hunting ground, and maybe still many of the sectors or subsectors in consumer where there is a shift from unorganized to organized because of the crisis. I think we are positive on, and we are constantly looking at them.
Okay. Nimesh, the other big trend ever since the earnings got over has been the supply of paper from the promoters and the PEs. A lot of blocks come in every second day. As a house, are you all been participating? Anything that you all have looked at in terms of buying in this supply of paper?
Extremely selectively. When we see the valuations fit for the business and the management that we analyze, and if the valuations are okay, then we are okay for it. But not participating wide. Many companies already had come down to significantly low levels in terms of valuation, so there was enough to pick from. So if something is extremely tempting, we participated, otherwise we did not. I'll just give you one more example, the kind of market reaction you see. April, we had a sharp rally, if you would remember, about 7-8% in a month, when there was no supply of paper and FII selling was a bit low in that month. So you saw the magic of, when there is less supply from FIIs or this primary markets, what kind of move the market can give. And I think we may move towards that kind of a market going forward once these issues get sorted and there is less FII selling or no FII selling.
The other notable trend that I observed in the last 1 month or 2 months or so is the fact that the domestic mutual funds have started participating in buying into the Adani Group names, whether it was Adani Enterprise, Adani Power, Adani Energy Solution. Most of the blue chip mutual funds have now started taking exposure. Your view on that group and anything that you all own in that group from a long-term perspective?
We do own some. As per our disclosures, we do own some companies in the Adani Group, and we have some of them we've been holding for quite some time. So won't be able to comment on why some of the mutual funds are participating now. Maybe some because of their own valuation or processes that they look for. Maybe they may be participating. We won't be able to really comment, Nimesh, on this.
I don't want to comment on why others are buying, but in generally, the fact that the domestic mutual fund have now finally, started taking position in that particular group. I wanted to ask you, basically, do you all have exposure to that group in that sense, and what's the view there within that group? What's your pecking order, whether the ports businesses or the other green and energy businesses?
So I'll still not give you a right answer. I'll go roundabout and give you the answer. For some time back, we moved towards companies that have, we started valuing hard assets more than technologies. So we actually started moving towards materials, real estate, power sector where there is a strong asset, or airports and ports. So we reevaluated all the companies that have strong hard assets and cash flows coming from them. And some of these companies qualified as valuations being attractive, or when you look at replacement costs or the kind of yield that they were getting, some of these assets became quite attractive there. And power, we were bullish on even when we looked at technology side. When we looked at AI, we became more positive on the power sector. And so some of those came in at that time.
Got it.
Got it. All right. This was an N3 special. Thanks a lot, Nimesh, as well as Nigel. Interesting chat as always. And have a good remainder of the week. And hopefully this momentum continues for the markets. On that note, we'll wrap up on this edition of Markets Forward. That's it from Nimesh and myself.
We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Crude oil prices fall to its lowest levels in 3 months on back of renewed hopes of a diplomatic breakthrough between Iran and the US. Trump claims a peace deal is days away. Tehran insists no final decision has been taken, but most of the draft text has been agreed upon. Iran state-run media releases details of a proposed memorandum that includes a 60-day window for negotiations on nuclear enrichment. India summons senior US diplomat Jason Meeks for a second time in 48 hours after attacks on 3 oil tankers crewed by Indians in 3 days. 3 Indian seafarers were killed in a US strike on a Palau-flagged ship off Oman's coast. Stock markets rally on hopes of a truce in the Gulf. Nifty gains nearly 500 points. Sensex reclaims 75,000. All sectoral indices end in the green. Rupee gains over 65 paisa against the dollar. Wall Street gears up for the historic SpaceX IPOs. Shadow markets predict a blockbuster debut for the record-breaking $75 billion fundraise. Elon Musk is all set to become a trillionaire tonight, and 4,400 SpaceX employees will become millionaires. 1 year since the Air India crash in Ahmedabad, no closure for the families of the 260 victims. The investigation report is still pending. Families set to hold a candlelight vigil at the crash site this evening. Hunt for the next full-time HDFC Bank chair gathers momentum. Sources say 5 people, including a former RBI deputy governor, a former CEO of an MNC, have been shortlisted. The Tata Sons board gets into a huddle amidst a tussle overtaking the holding company public. Sources say the agenda includes appraisals of key personnel and annual accounts. The tenure of Chairman Chandrasekaran, which expires by the end of February next year, was not on the agenda. Food safety regulator issues a notice to Nestle over alleged detection of insect in a Maggi packet. Another notice issued to Flipkart and Open Secret over alleged insects in dates products. KFC also faces a notice over hygiene issues. World's biggest football carnival kicks off. Host Mexico defeats South Africa in a match that saw 3 players being sent off with red cards. South Korea beats Czech Republic in the second match as large sections of empty seats in the stadium turn the spotlight on the inflated ticket prices. All right, the top story this evening, crude prices fell while stock markets across the world rose on hopes of a diplomatic breakthrough between Iran and the US. Here are the latest updates. Iran's state-run media has released details of a proposed memorandum that includes a 60-day window for negotiations on nuclear enrichment. The 14-point plan reportedly includes end to war in Lebanon and reopening of the Strait of Hormuz in 30 days. The report says that the text is yet to be finalized by the Iranian leadership. Axios, CNN and Bloomberg have reported that the signing ceremony may happen as soon as Sunday ahead of the G7 summit. US President Donald Trump has claimed a peace deal could be signed over the next few days. Trump also said that discussions and final points have been approved by US, Israel and other Gulf states. This as he cancelled strikes on Iran after promising to hit the country hard and take over Qasem Island. In Lebanon, Israeli military strikes continue to target southern region of the country. According to an AFP report, the strikes injured 10 staff members of a hospital in the Lebanese city of Tire. This as Lebanon's 3 historic hospitals have been targeted since the start of the conflict in March. Israeli Defense Forces claim to have hit 310 sites related to militant group Hezbollah, which eliminated 80 terrorists. In the oil market, Brent crude prices fell to its lowest levels in 3 months, but ship movement in the Strait of Hormuz remains constrained. Speaking to reporters at the Oval Office, President Trump also said that the strait would reopen once a deal is finalized.
We just made a great settlement of the war with Iran. And we're going to be subject to finalization of documents. We should get done over the next few days. We'll probably have a signing maybe in Europe. And it's a great thing.
Has the Supreme Leader approved this deal, sir?
I understand the answer is yes.
And when this deal is signed, is the United States going to immediately lift the blockade?
Yes, that's true. That's part of the deal.
And
you'll have oil prices dropping like a rock.
And sir, have you actually secured an agreement on the discussions about the nuclear material and the nuclear negotiations?
Yes, conceptually on that, and nobody's getting close to it because it's buried under a mountain, basically.
The Ministry of External Affairs has summoned top US diplomat Jason Meeks after attacks on 3 oil tankers crewed by Indians in 3 days. The meeting that lasted 45 minutes marks the second time the US diplomat has been summoned in 48 hours. 3 Indian seafarers were killed in a US strike on a Palau-flagged ship off Oman's coast. The ministry said that US's actions are unacceptable and undermine the safety of international maritime commerce. Hopes of a truce deal in the Gulf have sparked broad-based rally on Dalal Street, with the Nifty reclaiming the 23,600 mark. All sectoral index closed in the green, barring Nifty, IT and CPSE. Broader markets outperformed keeping the market breadth firmly in the favour of advances. India's inflation has accelerated to nearly 4%. The consumer price index in May has come in at 3.93%. This is largely in line with CNBC TV18's poll, which expected inflation to be just above the 4% mark. We will bring you an analysis of the data with Lata Venkatesh in just a bit. The hunt for the next HDFC Bank chairperson is in full swing. Sources have told CNBC TV18 that the bank has shortlisted 5 people for the post and the appointment is likely to happen in the first half of July. Furkan Morkan is here with more details. Furkan, what are your sources telling you?
What we learn is that the HDFC Bank's board would be appointing its new chairman by the first fortnight of July 2026. Sources tell CNBC TV18 that the bank's nomination and the remuneration committee has already shortlisted 5 different people for the coveted role. Among the people shortlisted are a former deputy governor of a Reserve Bank of India who has recently retired, a former public sector bank chief, a former chief of multinational company in India, a former bureaucrat, and a tech veteran. What we also learn is that the NRC of the bank would all these 5 people individually and zeroing in on 2 of them, which would be forwarded to the board of the bank. And the board of the bank would in turn select one of them as the next chairman of the bank. The appointment of a new chairman at HDFC Bank was necessitated after its former chairman, Atanu Chakraborty, abruptly resigned in March of 2026, citing ethical concerns. As a stopgap measure, the bank had appointed financial services veteran K.K. Mistry as its interim chairman. K.K. Mistry's 3 months term is coming to an end on June 18 this month and is set to get a reappointment till the new chairman comes on board. What we also learn is that the bank is moving to reappoint its CEO Shashidhar Jagdishan along with the appointment of the new chairman in the first fortnight of July 2026. Now, it's important to understand that the Jagdishan's reappointment is subject to the clean chit given by the law firms, and the report of which is still awaited and has been delayed. Now, what we learn is that the report from the law firms is expected by the end of this month. We reached out to the HDFC Bank for the comments on the story, and their comments are still awaited. Back to you.
All right, thank you, Furkan, for that. Today marks 1 year since the tragic Air India Boeing crash in Ahmedabad that claimed 260 lives. The flight bound for London's Gatwick Airport crashed just moments after takeoff, slamming into an area near a student hostel mess. A year later, many questions remain unanswered. The final investigation report is still awaited, and for the families of the victims, there is little sense of closure. My colleague Shivani Bazaz visited Ahmedabad's BJ Medical College, the crash site, where she met the families of 15-year-old Akash and 68-year-old Jivi Ben. Both were going about their daily lives when the crash changed everything in an instant. A year on, their loved ones continue to grapple with loss, grief, and the wait for answers.
1 year on, but here in Ahmedabad, the scars of the AI 171 tragedy are impossible to miss. I'm standing right behind what used to be the doctor's hostel that came directly in the path of the ill-fated aircraft on 12th of June last year. Even today, parts of the structure remain devastated, walls ripped apart, broken glass and shattered windows still visible. A haunting reminder of the violence of that afternoon that changed hundreds of lives forever.
इसकी उम्र 15 साल की थी और मेरी मम्मी का टिफ़िन लेके आया था. मेरी मम्मी की चाय की लिट्टी यहाँ पे थी और मम्मी को लिए खाना के लिए आया था और मम्मी ने खाना खाया. मम्मी यहाँ पे बैठी थी, वो सामने की ओर सोया था खटले लेके. जैसे ही विमान आया और विमान क्रैश हुआ, जिसका पंख उसके आगे गिरा.
हाथ जल गया. आप यहीं थी उस समय, तो आपको पता लगा जैसे ही सडनली अचानक से हुआ या आपको दिखा था आते हुए प्लेन?
नहीं दिखा.
नहीं दिखा,
अचानक अगला था.
तो तब जब इतनी ज़्यादा चोट लग गई तो समझ भी कुछ नहीं आ रहा होगा, धुआं इतना ज़्यादा होगा. तो आप बेटे को ढूंढने निकली थी, तभी आपको पता था कि वो वहीं है? क्या लगा आपको कि भाग गया होगा?
लग रहा था सो रहे हैं.
अब 1 साल हो गया है इतनी बड़ी घटना को. बहुत छोटा बच्चा था, आपका भी हाथ इतना ज़्यादा जल गया है. आप कुछ चाहती हैं कि इंसाफ हो, न्याय मिले? क्या चाहती हैं कि क्या हो, क्या करे सरकार आपके लिए? कैसे हो?
सवाल तो बहुत सारे हैं मैम, लेकिन अपने क्या करेंगे? सवाल करके बताएंगे, किसको क्या बताएंगे मैम? अभी क्या हुआ, क्या नहीं हुआ, अभी क्या बोल सकते हैं मैम?
1 year later, grief still hangs heavy. Even this evening, families, survivors and local residents are expected to gather here at this very spot with candles, not just to remember those lost, but to ask difficult questions that still linger.
All right, time for a short break. Coming up next, analysis on the inflation data in May with Lata Venkatesh after the short break.
Welcome back. You must have heard of the proverb, it never pours, it never rains, it pours. So there is a pouring of good news as far as inflation is concerned. Earlier today, because of some peace promises by President Trump, we saw crude going below the $90 mark, probably for the first time in, 45 days. And now we have the May inflation number in India, which has fallen short of the 4% mark. I must tell you that of the 20-odd economists I interviewed, not one had a number below the 4% mark. It was 4 or 4.05 or 4.1 and 4.2. So our average was actually 4.08, which is, a good 15 basis points higher than where it has actually come. So you have to say this is a below expectation inflation number, pleasantly so. The food inflation number is exactly as our poll said, 4.8%. It's come in at 4.78%. Well, that's a bit of a breather for the Reserve Bank. If it had gone above 4 or well above 4, then a rate hike August would have been a given, as well if crude prices had been, in the three-digit level. A lot of things can happen from now to August, but let's get the expert in. Abhishek Upadhyay, the chief economist at ISEC Primary Dealership, is with us. Abhishek, thank you very much for waiting by on a Friday evening. What does this number 3.93 make? Does it mean the chances of a rate hike or the necessity of a rate hike dulls a bit?
Well, number is broadly in line with our view. So we were at 4%.
Yeah.
We had expected some pickup in food inflation, some increase on the core inflation side also, not least because in May we started to see retail auto fuel prices going up. So that is part of the traditional core metric, which has gone up from 3.4% in April to around 3.8% in this print. More than 60% of that will just be the fuel price impact. Also, precious metal prices had gone up a little bit. So that impact is also visible here. So overall, agree with you. It's a benign print. At the same time, I would say I was not anticipating a lot of forward-looking information from this data. So for one, the key focus really is the second-round effects from energy price shock, how much of that will be and when will we start to see that. I think this print was little too early because, as I said, fuel prices were hiked just recently. Yes, WPI inflation had gone up already in April, above 8%, and core WPI inflation, which reflects imported price pressures much more swiftly compared to CPI inflation, that went up also in a reasonably broad-based manner. Over a period of time, you would expect that to spill over onto the retail inflation side also. But this month was still too soon to anticipate any of that. Tentatively, we are seeing some very early signs of spillovers. You can say in airline fares, etc. Also, restaurant charges, etc. have gone up, including in this CPI print, on the back of rise in commercial fuel prices. Commercial LPG prices have been going up. So you're seeing some of that, but not a lot of it. Overall, doesn't change our inflation view. We had the view that inflation in this quarter could evolve a little lower than what RBI actually indicated in the last meeting at 4.2%. We were at 4% average for the quarter. We stick to that. But for the full year, we have a similar view as RBI, which is around 5% inflation. Maybe details can be a little different because we expect core inflation to pick up less than what RBI assumes to be the case, whereas food inflation can be higher. But we still think inflation outlook is bad enough for it to mean that some policy normalization should take place over the next couple of meetings. We're not so sure about August, but over the next couple of meetings, there should still be a good chance of some policy normalization taking place.
Okay. What about the reaction of the bond market? Bond market, I think for the first time in so many weeks, is now trading below the 6.9 yield. I mean, we are at a time when inflation, at 3.93 is better than the 4.08, which was the CNBC TV 18 poll. There were a couple of people with even 4.2 expectations in this round, which is why our average came up. But what explains the yields falling so much, Abhishek? If anything, the global yields should give us reason to pause. You saw the US inflation wholesale price at 6.5 and even retail consumer price inflation at 4.2. It's a historic high for them. What about three-year high or four-year high? Aren't our yields surprising?
It is possible that even as your poll indicated, 4% inflation, people in markets could have expected a higher number. Also, bond market has been boosted. The sentiment of the bond market has been boosted by a couple of other things. One, of course, in the last policy meeting, RBI announced some very strong incentives to raise capital to improve the BOP situation. A lot of that money is expected to flow in over the next 3-4 months and will need to be deployed in the shortened part of the yield curve, you could say, which has been rallying over the last few sessions.
One minute. The money that will come, Abhishek, 1 minute. The money that will come will be 3-year to 5-year money, right? FCNR deposits. You're saying they'll be temporarily parked in G-Secs because it won't make sense to park them permanently there. It would make sense to lend them out. You're saying that they may be temporarily parked in G-Secs and that's why government security yields are lower?
So these funds will be parked in 3-5-year assets, right? So that is why you've seen 5-year G-Sec, for instance, coming down a full 50 basis points from the peak, whereas 10-year yields also obviously has come down with short end rallying so much, tends to spill over a little bit on the intermediate tenors also. And 10-year part of the curve has also shifted down by about half that. So 10-year is down roughly 25 basis points from the peak. Finally, also, as you were mentioning earlier, crude prices have declined quite significantly over the last few trading sessions. So that is also having an impact on the sentiment. That said, broadly, 10-year yields pre-start of the West Asia tensions in West Asia was at around 6.7% or so. We are at closer to 6.9%. Given there has been such a substantial shift in inflation outlook and policy outlook, plus there are some fiscal risks also which could crystallize down the line. I think downside for 10-year yields is not significant from here. Difficult to say that for short end of the yield curve, however, which could extend lower a bit more.
Okay. Do you think that there is a chance that even full year inflation may be lower than what all of us are factoring in? The RBI is factoring in 5.1 and most of the market is at 5 or 5 plus. If this was, I mean, there have been so many false starts, to make this an assumption is very difficult. But if indeed crude prices are at current levels, a little south of 90, and the truce is exactly what Trump has just announced, then do you think we need to bring down our expectations of inflation?
So right now, we were also working with a similar average crude price assumption as RBI, which is around $95. So if we do get a situation where crude prices seem to look like they could average much lower than that, it would definitely have some rub-off on inflation, both because global food prices, for instance, could be much more benign in that case. Our WPI inflation, which has gone up quite sharply over the last couple of months, that could cool down. Pipeline pressures could ease away. And also, I mean, higher fuel prices tend to have indirect impacts. So all of that could change a little bit. That said, I would still think that it is early to assume crude prices will average significantly lower. Yes, it is possible that sentiment impact could bring down prices more than what we are anticipating. But we have to see where it settles down over the next few months broadly to have a sharp sense. Baseline view always was that tensions will cool down and crude prices will come down, and that is why you were working with a 90 to 100 average crude price forecast, despite a sharply higher average in the first couple of months, which is April.
Sorry to interrupt, Abhishek. I'm being asked to wind down the discussion. Just a word, how many rate hikes, and at the moment, when do they start, you think?
We are working with 3 rate hikes. If crude prices do surprise much lower, maybe, I mean, we'll say a couple of hikes. Base case is October, but August is a live meeting for us. RBI will have a good bit of information by August, and if they choose to be preemptive, August can be a live meeting also.
Okay, fine. It just feels that with the inflation being slightly lower than what the street was expecting, maybe August is, the Reserve Bank has the liberty to push August away. But we will wait and see. Thank you very much indeed for analysing the inflation numbers. For us, the news from the MOSPI is that it is a little less than what the CNBC TV18 poll threw up. And therefore, we will have to wait and see. Along with the news from West Asia, the feeling is that RBI perhaps has the option to wait out the August meeting. That's it on this edition of Business 360. News and updates are waiting for you after a break.
welcome to Editor's Playbook. I'm Shireen Bhan. As the AI supercycle scorches on, data has become the lifeblood of a digital economy that now accounts for nearly 17% of global GDP. And data centers are the oil rigs powering that revolution. India is positioning itself as a key destination for data centers. From global tech giants to national heavyweights, big tech and big business is placing big bets. Meta has announced a partnership with Reliance to release capacity at the data center complex being built in Jamnagar. Google committed to $15 billion towards building an AI ecosystem in Andhra Pradesh. And Australia-based AirTrunk says it plans to invest as much as $30 billion in India by 2030. So what's fueling the data center drive in India? First things first, what exactly is a data center? Simply put, a data center is a facility that houses servers, storage systems, and networking equipment that stores, processes, and transmits digital information. Every ChatGPT prompt, every online payment, every Netflix stream, and every cloud-based application ultimately runs through a data center somewhere. So why India? For starters, India generates nearly 20% of the world's data, but accounts for only about 3% of global data center capacity, roughly 1.5 gigawatts today. That's a fraction of the capacity seen in the US and China. Second, India is amongst the most cost-effective locations in the world to build data centers, with only China offering lower development costs. And third, the government is sweetening the deal with incentives, including a 20-year tax holiday for companies using India-based data centers. And finally, regulations matter. The RBI requires certain categories of financial data to be stored exclusively within India. But as India races to become a global data center hub, some important questions deserve answers. What kind of returns can investors realistically expect? Can demand keep pace with the scale of investments being announced? And perhaps most importantly, in a country where water is already a scarce resource in many regions, are we prepared for data centers that consume large amounts of water for cooling and vast quantities of electricity to keep running? Those are the questions we'll explore on this edition of Editor's Playbook. I'm joined by Prashant Nair, Nimesh Shah, Sriram Iyer and Hormuz Vatakia. Gentlemen, thanks very much for joining us. Prashant, let's get straight to the brass tacks now. And I'll ask you this in the context of what we've seen happen in the US, where it is significant amount of capex being sent on infrastructure, data centers, and so on and so forth. The heavy lifting is being done by the private sector. Compare that to the news that came in from China overnight, suggesting almost $300 billion in AI capex on things like data centers, but largely being driven by the government and government-backed entities. In India, it is a private sector play, though the government is footing the bill as far as subsidies are concerned. So on balance, what's the cost of building a data center in India?
Shireen, it's a topical, hot topic. I can tell you that just today, right, we had a bunch of companies in our regular programming, and the data center question always comes up. And the answer always is in the affirmative. Yes, we are doing something. We are supplying. We are looking to do. So, yeah, I mean, it's really top of mind. So let me just tell you straight up, right? Now, the cost dynamics is this. And this is cost per megawatt of building data centers. And I'm taking I'm separating into two ways. One is a standard data center. The other is an AI-driven, AI-enabled data center. Because the cost difference is humongous. A standard data center is about 60 odd crores per megawatt. And these are dollar million figures, which I've converted with 95 as the exchange rate. So that makes a dollar difference. You looked at this, 2 years back, the dollar figures would have been much lower. AI-enabled data center, standard is 60 crores. AI-enabled could be about 190 to 200 crores, 195 odd crores, right? So that is the difference. This is per megawatt cost. Bulk of what is being built or is planned to be built in India is standard data centers, not AI data centers, though those will come a little later as well. So here, the current sort of operational capacity that we have is about 1.5 gigawatts of data center capacity. And these are all estimates, right? I mean, I was looking through a Nomura report which is totaled up all the announcements, and I'm assuming that they've not totaled what Meta has announced today, because every day there is something new, but this is about a week old, and they say, well, the pipeline is 15 gigawatts of data center capacity. But let's be conservative, and I've taken the lower end of this estimate. There is new 5 gigawatt of data center capacity scheduled to come up by 2030, which will take the total capacity in India to about 6.5 to 7 gigawatts. That is by 2030, right? The capital expenditure which is required, taking that cost per megawatt at 60 crores, is about $30 billion or so, right? So again, for the purpose of simplicity, take 100 to a dollar, that's about 3 lakh crores in terms of capital expenditure. Divided by 5, that's about 60,000 crores in terms of capex every year. So you're looking at very large numbers in terms of spends here. So that's the overall size, and maybe we can get back to how does this value split if 60,000 crores is what's going to be spent on this data center. And remember, Shireen, we discussed this earlier as well. Data center is the finish line, but till the finish line, there is a lot which will go in, right? Totally 60,000 crores will be spent, but how will this be split across various segments? And I think that is where a lot of companies are very excited to participate in.
I know Hormuz is standing by with all of that data on what this means as far as the picks and shovels are concerned, but I'll come back to you in just a second, Hormuz. But Sriram, you know, you've been looking at a lot of the data as well when we talk about data centers, no pun intended. You wanted to add to what Prashant just started with, and then I'll go to Nivesh and Hormuz.
So yeah, I mean, the advantage is very obvious, right? I mean, we are the cheapest after China when it comes to construction cost. Speaking of the parts of the puzzle, right, that you spoke about, the 60,000 crore. And construction cost is a huge part of it. And we are the cheapest after China. In terms of renewable energy, to reduce your footprint, using renewable energy to power your data center, we are after China and Vietnam. We are the, strategically speaking, we also provide additional, by the way, this is a very interesting thing about India, which I saw. Apparently now every 100 megawatt of power, new power capacity that we are building, we are among the fastest in Asia. Yeah. In 2 to 3 years, we are able to add 100 megawatts. And the same takes 5 to 10 years in Japan. Even in China, sometimes it goes up to 4 years. Like it can do it in 2 also. But there are occasions where, on average, we are doing much better than others. So that predictability gives us a certain advantage that other countries don't have. And more importantly, strategically, are you going to, as an American or a European company, are you going to set up your data center in China or Hong Kong or Taiwan? We are an obvious choice, and honestly, they have nowhere else to go. All of these companies have to come here. And that is where I have a problem with what we have to offer. We don't need to offer tax break, is my take on this thing, right? The advantages, the incentives are there in the economy. Just let them come, set it up, and, and we need to use the tax money to build a lot of guardrails. I'm guessing this conversation will go to there in terms of, the power, the water supplies, how it affects the society at large. We need the money for that also. And that, I think, is going to come from the tax money. That I think it should.
Whether or not sweeteners are needed, are necessary or not, is a matter up for debate. But, to your point that where else are they going to go? They have to come here. They're going elsewhere. We just had a big announcement coming in from Macron as well. They're building data centers even in Europe. I mean, there is a backlash in the US at this point in time. The real Erin Brockovich is leading the charge against data centers. But data centers are even looking at heading to space. We've just seen that Pixel Sarvam announcement. We've seen what Elon Musk has had to say. But so I think we can debate on whether the sweeteners have in fact put India much more firmly as part of the conversations when we talk about data centers.
So basically, Japan, it costs twice as much as it does in India.
Of course, so that's
but they will still build some centers there because again there are some strategic requirements for which, just like us, they are giving tax breaks. They are also giving this thing. But we have a certain, I think, natural advantage.
Just to counter to your argument on why should we not give tax benefits, I guess this whole play for the government for giving tax benefit is to also encourage. See, this is going to have a big amplifying effect in terms of our own, capex going up, and which would mean a lot of, growth getting added to the GDP. So it's not about only giving tax incentives to the global guys. It will also mean a lot of capex picking up and a lot of infrastructure getting built up, right?
So one of the things, for example, the argument is that it will create jobs. I think
it won't create that jobs. I don't think the argument is to create jobs. The argument is more about creating.
There will be some jobs for a few techies here.
The tax break question, Sriram. I think I remember speaking. Now this is the 20-year tax break. 20 plus, right?
21. 2047.
I don't think it is. If you see the mechanics of it, right? It is not a tax. It is not a. It went out as a break, but it is not a tax break. It is a correction. It is a tax correction. How? Because the point is that if there is an entity in India, say for example, Meta is in India and Meta is in the US, right? Meta US will use Meta data center, its data center in India, and they will pay something, right? At an arm's length, transfer pricing, etc. The tax break or whatever it is a break. But actually, if you get into the weeds of it, it's not a break. It is basically correcting the anomaly which existed exactly for this particular purpose, because the business is, these are going to be set up by large US companies, etc. With arms here, who will then sort of, pay out. Who will get paid, right? By the US and by the parent, basically.
Look it up. I mean, maybe.
Fair point there in terms of removing some of the friction and also making it easier for people to consider doing this in India, and that's where the other big question is. And I think there's unanimity not just on this panel but across the board that this is not a job generator.
No, it is not.
As much as the narrative would like to paint it, it is not a job generator. So what does it do in terms of the multiplier impact? And Hormuz, I want to get to you and Nimesh on that. What does it mean largely for India, for the economy? What kind of multiplier impact are we talking about?
Okay, I'll take this. So let me take this first.
Okay, go ahead, Nimesh.
So again, Shireen, like what everybody's been writing about this seems to be a decadal opportunity for India, right? As Prashant pointed out, our capacity is going to go up from 1.5 gigawatt to 7 gigawatt by FY30. This would mean a 30% CAGR for the next 5 years. So that's the kind of growth we are going to see in that particular space. The investments are close to be $35 billion in this particular space to create this kind of 15-17 gigawatt of data centers. So across the value chain, I'm just looking at the companies which can potentially benefit: switch gears, transformers, generator sets, UPS systems, cooling equipments, rack infrastructure. These are the few large piece within the data center which are likely to benefit. Look at what's happening with some of the real estate companies are the ones who've started the data center, and they are the leaders so far in terms of capacity. Whether it's Hiranandani,
I think people took an awfully long time to figure out the many parts, because for a very long time it was just a real estate play in India. Right?
Yeah, but
for almost so let me step back. Let me step one step back from what Nimesh said, and Hormuz is going to go even deeper with companies, etc. So this is the value, right? That the data. So this is how it splits: land and civil per megawatt, right? Land and civil is about 26% of the cost of setting up a data center per megawatt. Electrical systems about 42%. Mechanical and cooling, those cooling towers, etc., is 16%. There is racks, white space, security 7%, and design, project management, commissioning, etc., about 8%. That's the graphic. That kind of tells you, that 60 crore number that we put out. That is how that 60 crore splits. So real estate land is just seen this.
I'll give you a very recent example. Like yesterday, we got an interview with Apar Industries. Okay, and the management is very clear. This is going to be a big opportunity for them in the future. But even currently, because of a data center coming up in Maharashtra, one of the line has to be changed to increase the transmission of power. That itself has been almost some 400-500 crore opportunity for this company. So this entire value chain, whether it's cooling solutions, whether it's power, generators,
on cooling solutions,
everybody's going to benefit.
Showcase something very interesting. I'm sure, Shireen, I don't know if you saw that, right? At the Microsoft Build conference last week, they've come up with a cooling solution which essentially he claims that the amount of water required to cool a data center is going to be just as much as a restaurant. We don't know how it will work or not, because there will be disruptive technologies that will come even in this.
Exactly.
It has to.
So this is just the beginning.
It will have to.
So over a period of time.
But to the point that you were making, the things will evolve. But to the point that Nimesh was making about the conversation that you guys had with Apar Industries, I had a conversation with Shashi Mukundan, who heads Rolls-Royce in India, and exactly that. He was talking about they do power backup, gensets. Essentially, they're doing T3 in New Delhi, the airport terminal, and they see the big opportunity opening up as far as this whole data center business is concerned for things like power backup, etc. So it is going to be power. It is going to be power backup. It's It's going to be that entire electrification piece and, of course, renewable capacity. That is going to be crucial because we do have to talk about the environmental bill, and that's an important issue to address. This does have consequences for water. It does have consequences for electricity. And if you're going to do it on coal, well, then good luck, because we're going to end up in a precarious position. So I think those are all going to be spaces of opportunities, but also challenges that we're going to have to contend with. I'm going to very quickly bring Hormuz in because he's been waiting patiently with the picks and shovels. Who benefits, Hormuz?
Last week we were talking about this fact that whether or not we are falling behind in the AI race or not, but at least we can be confident enough to say that we are not falling behind in the data center race, at least in terms of the infrastructure part of the supply of the construction of a data center. We may not be building as many data centers as of now, but the parts and the components of it, there are enough and more companies that are getting into this, intend to go into this, and so on and so forth. And as Prashant was also highlighting, the number of stages or the number of components that are required, and there is almost 1 or 2 companies present in almost every part of it. Now, if you even take a look at the fiber and network business, you have the big flyers of this year, HFCL and Sterlite Tech, barring the last few sessions. Well, Sterlite Tech is up 500% this year. HFCL has almost tripled in value this year. So have that, the buzzword in it, and the market has gone after them. And you take a look at the cooling solutions bit as well. MTAR Tech is one such, the precision cooling bit. MTAR Tech is another name that has tripled in value this year. You take a look at of course, the Blue Stars and the Voltases have issues of their own for them to not outperform at this juncture, but they too are part of this value chain, right? And then come the infrastructure suppliers, the transformers, the equipment suppliers, the GE Vernovas, the Hitachi Energies and the gang, the CG Powers and so on. The Cummins India as well. There is Kirloskar Oil for the power backups, as you just mentioned about Rolls-Royce as well. Now, all of these companies being very integral to a data center, and a lot of these companies have spoken about it as well as to what kind of opportunity it will present for itself. HFCL in their earnings call, Sterlite Tech in their earnings call mentioned that the data center capacity is going to go up to 5 gigawatts by 2030. HFCL mentioned that the interconnect solutions of the data center that they are a part of, that's going to create an additional revenue stream of 400 crore in FY27 and 800 crores in FY28. So that's going to double going into FY28. And Hitachi Energy in its earnings call mentioned that 15% of every data center capex goes to them. And for a stock that has already gone up 80-90%, there are brokerages like Citi and so on. They are writing about the fact that it will go up even further, another 30-40%. Targets of as high as 45,000 on Hitachi Energy. Yeah. So the street is watching them carefully. They are getting the numbers. And if they are giving you that projection that, yes, it is a big opportunity, it will give you the numbers, the street has rewarded them proportionately as well. So we may not be making the full biryani yet, but we definitely have all the ingredients that are required to make it.
बिरयानी का प्रॉब्लम क्या है हरमज कि कभी-कभी रायता फैल जाता है on the environmental bill being
just to add to what what Harma said.
Sriram, don't fell raita. Don't fell raita. I want to get Nimesh to address the point that Hormuz was making, which is has data center become the new AI, Nimesh? That everybody is now claiming to be some part of the data center supply chain, value chain. Has this now become the new AI?
It is, Shirin. It is, Shirin. That is why I wanted to come to this point of valuations. I know we put out the chart of how the stocks have rallied. We should have just added as to what valuation they're trading as well. Just to add to the entire list of what Hormaz said, Hitachi, at the ISEC conference, the most attended session was of Hitachi. There was no place to stand, Shirin. That's the kind of interest which is there in the market to listen to the managements of these companies. And the management was like, so confident about growth for the next 5 years, 4 years. I mean, the kind of numbers they've spoken about, if they actually deliver, the stock can even double from here. That's the kind of
brag on.
But at the same time, we need to also be careful about, you will have a lot of those companies which will just come out and talk about data center or XYZ, and they'll have only small portion of it as a contributor.
A brick supplier can also
needs to be mindful as well in terms of, see, it's a decadal theme, and a lot of things will evolve and change. So, overnight you might see a lot of companies not able to deliver or technologies change or whatever. So, you have to be very careful as well.
Those of you who haven't
mindful on valuation.
for those of you who haven't subscribed to the Access, CNBC TV 18 Access, I think it's more than a year before now, our colleague Meghna had done a piece on Hitachi and asking why is it as valued as high as Nvidia at that time in terms of multiples. And if you had bought Access and invested wisely, you'd probably be appreciating this conversation. Hashtag humble brag.
Nicely done. Very subtle. I do want to, address the challenges and the risks associated because, we are seeing this backlash. It's being taken up by the U.S. Congress. We've seen communities rallying against this as well. And there is an environmental cost to this, which is what we need to be mindful of. And, I'm wondering if we take a last shot at that, Prashant, starting with you.
No, I think that's a real one. But I've spoken to lots of people in the ecosystem, and generally the feedback that I've got is that, especially for these standard data centers, right, there is a one-time usage, and then it is reused. The water is reused as well. It's not. So yeah, the water, the carbon. The water footprint, of course, the carbon footprint, if you're using coal, etc., is high because they are just energy guzzlers, right? Yeah. Just think about this. If you just divide the total cost of running a data center, 50% is capex, 50% is opex, and out of that 50% opex, that is operating expenditure, about 25% is just power. So actually, a data center is nothing but like a power guzzler, right? Yeah. So you're absolutely right. But I think we can all be a little hopeful and hope that technology will solve things.
I've actually seen a data center. Yeah. I've gone and seen. I visited a data center.
There's one right here. The Yota one is in Panvel. Yeah. But I'll tell you, Shireen, just a couple of points. So that is correct, and they've tried putting data centers in the sea. That didn't work. Yeah. Maybe they'll put in space. I don't think all kinds of things have been.
That's the next.
I think they haven't ruled it out yet.
Yeah, no. But I'm saying there's liquid
in the ocean.
There's liquid cooling, for example. These
that's what I was talking about.
BP has a product. So all this will evolve as we
closed loop cooling. Yeah. Apparently, it recycles the same water for repeated cooling.
Correct.
And in the process, he says it would use less than a restaurant in terms of in a year. But I would add a caveat. These guys will say these things. I think the wise thing to do will be to have a public dashboard, something that monitors the footprint, monitors the water usage, the stress to the existing systems. And this is something that we need to have. And make sure that these guys have captive power capacities, right? They invest in their own power and they use it.
So that is the other thing, right? For example, Shireen, nuclear, right? All this development and fast-tracking development for these small modular reactors actually is data centers. That is the driving force, right? Look at Meta, right? They've tied up with CleanMax. What is CleanMax? CleanMax is wind and solar. Yep. So a lot of this data center capacity is going to be, is going to come up on the back of renewable power. Just one thing, Shireen, I was, before we started discussing the topic, etc., I was wondering, and this question was coming up that like in defense, right? You give out a large order and you have something called an offset. So the foreign company getting the order has to spend, say, 40%, 50% in India. And I was asking this question, why don't we have something? And this, of course, came to my mind sometime back when I was thinking, about that tax break. We're giving, and this land which is subsidized for power, many states are rolling out the red carpet, etc., etc. So should we have offsets to make sure that, billions of dollars, but that it creates a value chain in India across the board, But I think, as Hormus pointed out, a list of these companies in each of the value categories, there are companies which are already there, although I did see that many of them are MNCs, right? Yes. But they have the technology.
No, but this data center opportunity will be also for Indian companies, because India data has to be stored in India. So there are a lot of companies who are only focusing on government orders.
The data belongs to WhatsApp, Facebook, and Instagram.
Data.
And you know, and it's a good point that you make, Prashant. I think it's a good point that you made there with defense, because, you know, while people have argued about offsets having acted as constraints or deterrents, there's also the fact that we did in fact see a lot of joint ventures. We did see a lot of partnerships taking place, you know, the likes of HAL partnering with a whole bunch of companies, etc. So to your point about being able to create that value chain and ensure that India has a piece of the global value chain, I think that's an important point. So it's not just use India to build data centers, but use India, use
it should develop,
use Indian talent.
If the infrastructure is there, it will automatically inspire local entrepreneurs.
Just look at China, what China does, right? China gets companies in and then says, well, it build the entire, everything should be sourced from here, right? Something like that. I don't know what value, and that'll be an interesting data point to get. The new stuff which is being built, how much is being sourced, built in India? I think that'll... So that kind of creates that multiplier, Shireen, that you were talking about.
The
right?
racks
that creates jobs and economic value here.
Absolutely. And I think it will make cost sense for companies to procure from India, from Indian suppliers.
Absolutely.
So to Nimesh's point and to Hormuz's point, it will benefit the larger economy. It will have a multiplier impact. Final last word, Sriram, before we close.
Last word, don't throw the baby out with the bathwater, to use a cliche. We need data centers, but we also need guardrails. We need to make sure that the compensation and the value creation is also happening in the places where the damage is being caused. So in that sense, we should also focus on the geography of where it is being built. I think it is a great opportunity for us to develop smaller towns and cities.
Where it is being built is 3 areas. One is Bombay. Bombay is majority.
Bombay. Bad idea.
No, but this is being built in that Panvel. What is being called?
I think we can go a little further away from
Bombay. The new Bombay.
Yeah.
Right?
Third.
And the logic is very simple. And the Visakhapatnam is the other one.
Visakhapatnam,
and Noida, which is, I think, also...
I think we need to go outside of the big cities. And because if you look at South Korea, Thailand,
but again,
Singapore, not Singapore,
largely outside of big cities.
So they are giving the tax break in South Korea and Thailand, etc., where the incentive is dependent on you building it in a particular location. So they are creating a special economic zone kind of a thing and saying that only if you build it there, then I'll give you this thing. Therefore, there is a certain predictability to that relationship.
I think it is Bombay. It is because the landing stations, right? The undersea cables are that's why Visakhapatnam. That's why Bombay. I'm not sure, but
again,
these are the.
So Noida also there are.
I think. Yes, Noida is also an emerging hub. But to the point, and we're out of time, gentlemen. But this is an evolving story. It's also an evolving policy space. It's an evolving tech space. And the hope really is that we will see an acceleration as far as technology is concerned to address some of those risks and some of those challenges, and also an acceleration of the Indian ecosystem to be able to deliver and capitalize on the data center momentum. We would have loved to continue, but that's a wrap on this edition of Editor's Playbook. Prashant, Nimesh, Hormuz and Sriram, many thanks for joining us. We will see you again next week. Till then, from all of us here, goodbye. Thanks for watching.
Bye.